Our fifth Rnblive, public presser, and the engagements that we always have here every Thursday. You're almost welcome, courtesy of the Radical New Bar. I'd like to take this opportunity to thank you all for being here and thank our speakers. You're almost welcome to the ULS house. Yes. So we're going to start right off. We apologize for the slight delay, but would like to start off with an opening prayer. I'd like to welcome Miss Asiat to come and take us through a prayer. Yes, we are in Ramadan and Lent period, and today we're going to be led by Asiat. You're most welcome.
Hello, good morning. Assalamu alaikum for the Muslim community. Let us humble ourselves for a prayer. A'udhu billahi minash shaitanir rajim. Bismillahir rahmanir rahim. Kul huwa Allahu ahad, Allahu samad, lam yalid wa lam yulad wa lam yakul lahu kufuwan ahad. Amen. Thank you.
Thank you so much, Asiat, for leading us to the word of prayer. Yes, so without further ado, I'd like to welcome Miss Afra to give us the opening remarks on behalf of the CEO. Yes, is Afra here? Or before that, let's rise up for the anthems. Apologies about that. Let's stand up for the anthems.
Mungu twaomba unilinde Jumuiya Afrika Mashariki, tuwezeshe kuishi kwa amani, tutimize na malengo yetu. Jumuiya yetu sote tulilinde, tuajibike, tuimarike. Umoja wetu ni nguzo yetu, idumu jumuiya yetu.
Wow, thank you so much. Let's take our seats. My name is Angomruth Julie. I'm the Program Officer for Professional Development at the Uganda Law Society, and I'm going to be your MC today, alongside Mr. Robert Jurua, who will be taking on shortly after me. But for now, let's welcome remarks from our CEO, being given by Ms. Afra Apio. Yes, you're most welcome.
Our distinguished guests today, Mr. Edward Amanyire, Mr. Dennis Chizito, Mr. Louis Chizito Namwanja, Mr. Ismail Mukasa, Ms. Kushi Narada, ULS Council members, members of the Uganda Law Society joining us physically and online, members of the press, ladies and gentlemen, good morning. My name is Apio Afra. I'm the head rule of law, Uganda Law Society. I'll be reading the CEO's opening remarks verbatim, who is unable to be with us this morning. owing to our prior engagement. I'll proceed to read her opening remarks. On behalf of the Uganda Law Society, I warmly welcome you to this 5th edition of Rnblive, our weekly platform that continues to foster dialogue on emerging issues affecting the legal profession, governance, and the nation at large. Rnblive has grown into an important space where members of the bar, professionals from different sectors, and the wider public come together to interrogate topical issues, exchange ideas, and deepen our understanding of developments that shape our practice and the environments in which we operate. Our discussions are particularly timely and relevant. First, we shall explore understanding virtual assets, legal recognition, risk, and regulation. As technology evolves, the digital economy continues to expand As technology evolves and the digital economy continues to expand, virtual assets are increasingly becoming part of financial and commercial transactions across the world. From cryptocurrencies to other forms of digital assets, these innovations present both opportunities and regulatory challenges. As lawyers, we must stay informed and equipped to advise clients navigating this evolving landscape, while also contributing to the development of sound legal and policy frameworks that promote innovation while safeguarding the public interest. Secondly, we will discuss, beyond malpractice, the strategic value of professional indemnity insurance for law firms. While professional indemnity insurance is often viewed simply as protection against claims of negligence and malpractice, its value goes beyond that. It is an important tool for risk management, professional credibility, and institutional resilience within law firms. In an increasingly complex legal and commercial environment, understanding how such protections support the sustainability and reputation of legal practice is essential. Thirdly, we shall be hearing from a company that connects clients to professionals. Many people face legal challenges and do not know how or where to find a good lawyer. We shall be hearing more about improving our visibility as lawyers and enhancing access to legal services of clients. These conversations are therefore not only important for our members as legal practitioners, but also for the wider public that interacts with legal and professional services in an increasingly digital and interconnected world. The Uganda Law Society remains committed to ensuring that our members remain informed, adaptive, and prepared for the future of legal practice. Platforms such as Rnblive are part of that broader commitment to continuous learning, innovation, professional growth, and raising awareness. Once again, I welcome you all and look forward to a rich and insightful discussion. Thank you.
Let's give Afra another round of applause. Thank you so much, Afra. Yes, so we're going to delve right into our topics. Our first topic is understanding virtual assets, legal recognition, risk, and regulation. And as already introduced, we are joined by our speakers that are very knowledgeable in this area. And I'm going to basically just give an overview of what we're going to be looking at today. So virtual assets is an area that is rapidly transforming financial systems and commercial transactions across the world. From cryptocurrencies to tokens, digital assets, these technologies are creating new opportunities for investment, innovation, and cross-border transactions. However, with these opportunities also come important legal and regulatory questions. How are virtual assets recognized within existing legal frameworks? What risks do they pose in terms of fraud, consumer protection, and financial stability? And how should regulations respond in order to strike the right balance between fostering innovation and protecting the public? For the legal profession, as well as the general public, this is a critical conversation. As technology continues to evolve, everyone must understand the emerging regulatory landscape and the legal implications of virtual assets so that we can competently advise clients operating in the digital economy. So we are joined by our speakers today. We have Mr. Luis Namwanja Chizito. Let's first give him a hand of applause. Thank you so much, Mr. Luis, for joining us. Yes, Mr. Chizito is a lawyer and a partner at Pentagon Advocates and has vast knowledge in the commercial and financial sector. He has advised on a private members bill titled the Capital Markets Authority Amendment Bill 2023, as well as the Mortgage Refinance Institutions Bill 2024. He is passionate about fintech law, virtual assets, private equity, capital markets, and banking. He offers legal advice and does transactions on technology, startups seeking to raise venture capital. He also advises on other compliance matters. Luis is a writer and writes articles concerning commercial and business matters in the Daily Monitor. Thank you so much, Luis. We're also joined online by another speaker, Mr. Dennis Chizito. Can we confirm if Mr. Dennis is hearing us? Dennis, are you there? Mr. Chizito, Dennis, can you hear us? Okay. As Dennis confirms, let me just briefly read out his bio. So Mr. Dennis Chizito is the Director of Market Supervision at the Capital Markets Authority. Dennis has been working at the Uganda Capital Markets Authority for the last 10 years. He heads the Market Supervision Department, which is responsible for licensing and monitoring conduct of licensed firms in Uganda's capital markets. He has a wealth of experience in financial markets, development, and regulation. Prior to joining the CMA, Dennis worked as an external and internal auditor. Dennis is a member of the Association of Chartered Certified Accountants UK and the Institute of Certified Public Accountants of Uganda. He is also an associate of the Toronto Centre for Global Leadership in Financial Supervision. You're most welcome, Dennis. Kindly confirm if you can hear us now. Okay.
Yes, I can, and happy to be here.
Yes, thank you so much, Dennis. Wonderful. We're also joined by Mr. Edward Amanyira. Thank you so much for being here. Edward is the manager of strategic analysis at the Financial Intelligence Authority. Edward is an experienced anti-money laundering and countering the financing of terrorism professional with over 12 years of experience in financial intelligence and economic governance. He began his career at the Inspectorate of Government as a financial crimes expert. He later joined the FIA, where he currently serves as head of the Strategic Analysis Division. He holds a master's degree in business administration and professional certifications as a certified financial crimes specialist, CFCS, and certified anti-money laundering specialist. His expertise in virtual assets and emerging financial technologies informs his active representation of the FIA on the Blockchain Technical Working Group hosted by the Bank of Uganda, where he contributes to national discussions on fintech innovation, virtual assets, and regulatory safeguards. Yes, thank you so much, Mr. Edward Amanyere, for being here. Yes, so I'd like to take this opportunity to welcome our first speaker, Mr. Louis Chizito, to take up the stage. Let's give him a round of applause.
Right, good morning. Typical of the Ugandan fashion, of course, we are not so late. Starting at about 11:35, in my view, is actually well within Ugandan time frame. So, for those of you who are watching us, trust we're not that late. So, my topic today, we are just going to look at the general conceptual understanding at a conceptual level and at a practical level what virtual assets are. That's at least according to the brief I got. So I'm going to start with the basics. At a conceptual level, what is a virtual asset? We have all heard of something called blockchain technology, not so? Yes. Now, the blockchains are many. We have heard of something called the Bitcoin blockchain, the Ethereum blockchain, there are Solana, all these are blockchains. Now, when you create something on the blockchain, which is technically a distributed ledger, DLT, but you should also understand that not all DLTs are blockchains. But for simplicity's sake, a blockchain is a sort of distributed ledger technology, in that information on that kind of technology does not travel in a linear fashion. It travels simultaneously. If you have to put something on the blockchain, you need consensus amongst all the players on that blockchain. It's immutable. Once you put it there, you can't change it. Yeah? And on all those nodes. So in brief, that's what a blockchain is. Now, once you get something on the blockchain and you run it, and you create scarcity. For instance, if you look at the Bitcoin has value because in its entire life cycle, there will only be 21 million Bitcoin. So by that very nature, they made it a deflationary asset that has some sort of scarcity. So once you create something on the blockchain, and then you create scarcity of that thing, then it becomes something that has value. Now that's Bitcoin. Now Bitcoin was conceived in a white paper that we know as the peer-to-peer cashless system by Satoshi Nakamoto in 2008, after the 2008 financial crisis. The central premise of that paper was to really do away with what you call intermediaries, financial intermediaries. Remember, one of the reasons why the financial crisis of 2008 happened was because of over-trusting financial intermediaries that actually created bombs or time bombs in the financial system. So Satoshi, who we don't know who he is, whether he's a person or an entity or a bunch of covert CIA assets, we don't know, but my guess is these are intelligence people masquerading as individuals. That's just a side note. Satoshi came up with the white papers that conceived the Bitcoin peer-to-peer cashless system. Why? Over-trusting trusted third-party financial intermediaries had ruined the financial system. And most of you who followed the financial crisis in 2008, you realize we had things like Occupy Wall Street, where some youthful protesters went to Wall Street and they occupied the New York Stock Exchange premises, blaming those people for really for bombing or creating time bombs in the financial system that blew the entire ecosystem. So at a conceptual level, we have a virtual asset. What is a virtual asset? A virtual asset is something that is created on an underlying technology called the blockchain. What is the blockchain? A blockchain is a form of a distributed ledger technology where information does not travel in a linear fashion, but simultaneously amongst all players. Now, to make it a little bit simpler, I'll give an example of an email or even a WhatsApp message. Now, on the blockchain, the difference between normal messages and the message on the blockchain is that when you send an email, that email is simultaneously owned by the person you have sent it to and the person that has sent it. So value is not extinguished at my point of sending. It is with me and it is with another person. Now, the difference with blockchain technologies is that it deals with that problem. Is that in that if I send that message to someone as value, it is extinguished at my point of sending, and then it assures that the person who has received it is the only person that has it. It is called a double spend problem. So that's what blockchain technology came to actually remedy. Now, having removed the conceptual issues out of the way, I want to explain the various forms of virtual assets. And before I think I go into the various forms, I want to give some background to why we are having this discussion today. Edward, my friend who I met very many weeks ago at the regulatory impact assessment that was organized by, not organized per se, but it was a directive from Cabinet to have it, I think 3 weeks ago. Edward and a couple of stakeholders in the judiciary, financial intelligence, capital markets, had a regulatory impact assessment on the directive of the Cabinet of Uganda to direct the Ministry of Finance to come up with instruments to regulate virtual assets. That was conceived by the report that he will talk about that was dealing with anti-money laundering issues. You know, one of the issues we've had in the virtual asset space is money laundering. So the Cabinet of Uganda, I think on 25th September last year, approved a minute, which they actually sent to the ministry to have a law to regulate virtual assets. In Africa, there are about 5 or 6 that have laws on virtual assets. I'm talking about standalone laws on virtual assets. Kenya is the much more recent example. They passed their virtual asset service providers law last year towards the end, I think around December. It was signed by the president. And here in Uganda, Edward will give us more information, but from reliable sources, we might have a law on the virtual assets, probably early next year, late this year. But where does that leave us as lawyers? We're supposed to position ourselves. That's why I am happy with the radical new, but you know, by the time our CLE programs in Law Society conceive a CLE program, even which appears to be trending, normally we are 10 years behind. If you are very keen, you look at the construction. Lately we have CLE programs on construction, but construction, according to the market trends, the Law Society came to have CLE programs on construction, about construction law, that is, about 10 years after the market had taken off. But typical of the radical new bar and living by our mantra, I don't see it here, but one of the mantras we have is digitization. We are actually living true to the promise of digitization, and I would love to thank the President and the Radical New Bar for actually conceiving this discussion early enough as we are having the law, because lawyers have positioned themselves and don't wait for the market to be 10 years ahead and then we are having CLE programs. So I was at the point of the law. So we shall have the law, so lawyers have to position ourselves. So let me go into the various forms of virtual assets. I hope the conceptual discussions have been fairly clear. If they're not that clear, we shall have a panel discussion and we shall clean up all the patches that we have left in the way. But virtual assets, we have types. We have asset-referenced virtual assets. We have real virtual assets, the Bitcoin, the ones that are typically like the Bitcoin or the Bitcoin network. So in the part of asset-referenced virtual assets, we have stablecoins. Most of us have heard of stablecoins. Now, a stablecoin, in simple language, it references the value of a real-world asset. If you look at a stablecoin like Tether, for instance, Tether it's actually a company that runs a stablecoin called USDT. So what Tether does, the company that is, it runs layer 1, layer 2 blockchain, and then it makes sure that the dollars it is backing its tokens on the blockchain, the ones that I've just described on the blockchain, it backs them with real-world dollars. So what Tether does is that it holds US government securities, government bonds. It holds them, and also it holds cash deposits in banks in the US of dollars, and then it references that value on the blockchain. So there's a 1-to-1 ratio. For every dollar in reserve that Tether has, there's $1 on that one token that is issued on the blockchain. So that is a stable coin. Now, what should lawyers be interested in stable coins? Not so long ago, I was advising on something called an independent contractor and token vesting agreement. Now, the reason why stable coins are becoming very apparent to the point that even a divided Congress like the US passed what you call the Genius Act to regulate them last year is because they have become very omnipresent. Stable coins in our fragmented financial architecture provide an avenue where you can transfer value simultaneously without waiting for reconciliations and settlements that happen way after value has been generated. So a stable coin has a 1-to-1 ratio, and when you look at arguments like an independent contractor token generation or token vesting agreement, is that it enables lawyers to actually help their clients get to pay them in a value that is referenced in a token or that is referenced on a stable coin, So you'll find contracts where the contract consideration is not paid on a bank, in an EFT transaction, it's not paid through mobile money, it's not paid through all other payment instruments, but it is paid through something called USDT. And then from there, you have a token generation event where upon being paid a certain value of that stable coin, then you can get a token that is some sort of compensation that vests over time. So we have seen these things in the market, and they are happening. And unfortunately, more Kenyan lawyers are actually advising Ugandan clients on contracts dealing with consideration that has been paid on virtual assets. So this is a very real discussion. Then the other types of virtual assets we also have the Bitcoin, Ethereum. Now, we have been and then we have something called tokenization. Now, tokenization is just a fancy way of using blockchain technology, putting something on blockchain and transferring that value. I'll give you an example. If I'm going to tokenize something, what I do is that I wrap it into a smart contract. What is a smart contract? A smart contract is, and for those of you who are putting things on social media, I'm speaking deliberately slowly, so that at least we synthesize these things. Sometimes I go back and forth so that I synthesize some of these things. Now, tokenization deals with smart contracts. What is a smart contract? Think of it as a contract that you draft for your clients every day, but this contract is in code and it is enabled on the blockchain. You get? So you have a set of rules that are designed and coded onto the blockchain technology to actually store and transfer value. So that's a smart contract. Now, smart contracts are normally used on blockchains, especially the Ethereum blockchain. For those of you who know what the Ethereum cryptocurrency is. Now, Ethereum has its own blockchain. Now, that's why people are minting and generating, not minting per se, generating smart contracts. Now, all these smart contracts can be used for all sorts of things, including tokenization. Now, once you wrap a real-world asset and the rules of transferring its value on a smart contract, what you actually now have is a tokenized asset. And like Dennis will tell us later on, we have in the capital markets, we're having tokenized assets. For instance, not so long ago, the New York Stock Exchange, which is the biggest stock exchange by volume in the world, it announced that it's created a platform to tokenize securities. Think of it as tokenizing securities dealing with maybe Apple, securities of Nvidia. So they tokenize the entire arrangement that you can trade on the New York Stock Exchange, and they create a whole new environment on the blockchain to transfer value. One of the biggest advantages of that is that it creates what you call finality in settlement. I'll give you an example. When you go to our capital markets and you are done trading, settlement doesn't happen immediately. In other words, in the real capital markets, what happens is you trade something, you buy something, but then the real settlement and getting value for it happens days, even hours later. For instance, our bond market settlement normally is within T+1 hours, T+2. But with blockchain-enabled tokenized assets, is that it happens, like I said, information travels simultaneously. Once you transfer something, that person gets it there and then. You don't have to wait. I'll give you an example. JP Morgan is doing something called a deposit token. Now, think of a deposit token as the deposits in your bank that are being put on the blockchain. Now, a deposit token is one form of a virtual asset. But a deposit token, one of the advantages it has is that once that value is transferred, you get it there and then. The reconciliation, the back-end information that we never know about as end users, takes a lot of time. When you get the message that, for instance, mobile money. Once I send you mobile money, and you have messages that are showing that you have got the mobile money, the back-end systems of reconciliation in MTN are still reconciling and settling that payment. It can take about some time for MTN to actually say, we received this money and indeed we have it on our balance sheet as a liability or as an asset. Now with blockchain-enabled virtual assets, everything happens simultaneously. The settlement, the reconciliations. Because now, I'll give you an example. For MTN mobile money, they have to do reconciliations with Bank of Uganda literally at the end of every day. And look at it this way. MTN is an electronic money issuer. Yeah? So MTN has about 12 banks where they hold real cash for each for each e-money value they issue. Now reconciling that does not happen within a few hours. So it happens after the end of every day with BOU. So these banks have to reconcile with MTN, and then that whole process doesn't happen simultaneously. But with blockchain-enabled transaction, the difference here is you have simultaneous transfer of value where you don't have to wait for settlement. Now, having said that, what are the opportunities for lawyers? I don't want to go on and speak for so long because we have a panel discussion. What are the opportunities for lawyers? Now, I was reading a tweet where one of our younger colleagues who has just left LDC was saying, you know, for me, he went to Arua, or an upcountry place, to stop competing or to avoid competition with the tier 1 law firms like the ones we know, to avoid competition with tier 1 law firms, because that's where he could get the clientele. Now, my answer to that is, as lawyers, we have to position ourselves better. It's not entirely true that when you go up country, you'll get clientele, and like our discussant will also tell us how they help lawyers get clients, is that sometimes all about positioning. Now, there are very many emerging areas, and Web3, these things of virtual assets fall into the wider category of Web3. One thing I did not explain is that the internet, ever since, not the internet, the World Wide Web has gone through a series of metamorphoses. We had Web 1, which was a read-only instrument. For instance, so most of you who saw the internet, the World Wide Web in the early 90s, you could only literally read and send a few emails. But with the emergence of Facebook, which is a Web 2 framework, you now interact. So you can send a message, send a video. Because of JavaScript, you can respond. Now, the difference between Web 1 and Web 2 and what we are in called Web 3 is that now you can own an asset on the internet, on the World Wide Web. Recently, the United Kingdom, the House of Commons, passed a digital assets law. Now, in that digital assets law, they recognized a third category of owning property. According to common law and the common law we learned in law schools, we have two types of holding assets, or two types of property. You have choices in action and choices in, guys, we learned these things in school. Choices in action and choices in possession. Now, that law clarified that the way assets are held in the virtual assets world is not the same as choices in action and choices in possession. They came up with something called a data object. And for those of you guys who are writing things on social media, please, I'm going slow so that we can educate the public on these things, so that you also write clearly. Now, a third category of owning property is called a data asset. It recognizes that the way we hold assets in the virtual asset space is different from choices in action, and it's like a data object. So now that we have three categories of owning property, that is where Web 3 comes in. Remember, the first two phases of the evolution of the World Wide Web did not allow you to send a message and then you extinguish it from a point of sending. What Web 2 did is that you send a Facebook message and I can still keep it, and the person who has sent it also keeps it. Now, with Web 3, you send a token and you extinguish it. You extinguish it at the point of Louis, who has sent it, and then you only make sure that the person you have sent it to only has that message. Now, that's the key difference. That's why the House of Commons, they actually passed a law last year recognizing a third property, a third type of holding property, which is called the data object. Now, where all this comes in is that lawyers can position themselves, advise adequately. Digitization or digital transformation does not necessarily mean that lawyers lose work. It actually evolves the kind of work we do. Now, the world is changing very fast, and I'm going to conclude by this. The world is changing at a breakneck speed. And the truth is, our education institutions are not going to catch up fast enough. Like I have told you also earlier, our CLE programs are not going to catch up fast enough. Since we are in the world of the information age right as we speak, it's incumbent upon us to actually enrich ourselves, position ourselves right, be open-minded. I will tell you, I drafted a bill for Honorable Nabeta, a private member's bill that sought to have some of these things in our legislation, virtual assets. I will tell you that the first time I walked into the Commissioner of Financial Services office, it was a disaster. It was a disaster because he was saying, why are you guys promoting money laundering? It was a discussion that was, it was even a non-starter. But as we speak right now, there has been a change in heart. Even the commissioner and the Financial Services Department at Ministry of Finance, they actually realized that, yes, where we are going, the geopolitics is actually supporting such laws. I'll conclude with this. I've said this very many times, but this time I'm concluding. When you look at the capital market space that Dennis is going to talk about shortly, we are seeing a lot of blockchain-enabled instruments, what you call DLT financial instruments, digital ledger-generated financial instruments, tokenized assets. Now, I've just mentioned that the New York Stock Exchange is developing a whole platform. Now, when you look at our laws, for a long time we have been actually dealing with digital assets, but in a different form, not in a blockchain-enabled way. I'll give you an example. There is a law called the Securities Central Depository that the CMA oversees or implements. That law recognizes what you would call the dematerialization of physical share certificates. Now, dematerialization means that you do not need a paper. You know what our Companies Act says? I'm forgetting the section. That for you to prove ownership in a company, you need a physical share certificate. Now, that law recognizes that we're in a digital age. It was passed in 2009 by Parliament. That law recognizes that ones and zeros in a computer system somewhere can prove ownership. So now we are in an age where if your company is listed on the stock exchange, you do not have to ask for a physical share certificate, but that depository opens up accounts that reflect the amount of shares you actually own in that company. That is called dematerialization. In the United States, the last physical certificate of a bond, of the government bonds, because I'm referencing the US government bond market a lot because it is the biggest and most liquid, the deepest and most liquid market we have. And even our Bank of Uganda here actually holds US Treasury securities in our reserves. So that depository, if you go to Uganda Securities Exchange, there is an exchange business. Uganda Securities Exchange runs the exchange, but it has a separate company, which is the depository. Now, that depository is what records the ownership in digital entry form of what you own in that company. Now, there is a company called DTC in the US. DTC is a custodian of digital entries that prove ownership in companies that have listed on the stock exchange. DTC is actually tokenizing how you hold assets. Now we are entering into an age where a depository where the stock exchange is keeping your value is not just opening up accounts, but it is transferring to what you call a wallet and key model. Let me explain. When you own Bitcoin, what proves that you own Bitcoin is the private key. The private key. Now, the wallet within which these assets are kept has something called a private and public key. Now, the public key is which allows me, Louis, to send you money. Now, the private key is what allows you to access the money I have sent you. So, that wallet and key model is the evolution in the capital markets, where even the New York Stock Exchange that is trying to tokenize assets is actually intervening and trying to have correspondences and partnerships with wallet providers. How you only own Bitcoin because legally we have three types of how we know that we own assets. There is, I know, therefore I own. That's the Bitcoin model. You know the private key. When you lose it, you have lost those assets. Then I am, therefore I own. Louis, I go to a bank, I identify myself. I'm Louis. They give me my money, I sign somewhere. Then there is I am, therefore I own. I am, therefore I own. I know, therefore I own. So there are three. So I'm going to conclude by saying we should position ourselves as lawyers. Legal practice is expanding. And even insurance, now in Kenya, they are insuring virtual assets. There is a framework where the Insurance Authority of Kenya is coming up with products to insure, because Kenya passed its law last year on virtual assets. So the market is growing, and I'm going to leave the statistics to Edward, though I pray that Edward does not intimidate us with many statistics, because lawyers and statistics, we are kind of averse. We are not well-matched bedfellows. So thank you for listening to me, and I'm open to the panel discussion. I hope I've been clear. If you have written anything on social media and it's not very clear, just send me a small message. I'll type out something. So thank you for inviting me and for opening up. For me, I would love to thank the Radical New Bar for having this discussion before we have the law. Because I know a typical CLE program to train lawyers on virtual assets, in my view, is going to come 5 years later, after we have passed the law. But now that, and I'll tell you for sure, last week I got a call from a peer-to-peer crypto trade of mine. One of the problems those people are having is arbitrary arrests by police. So if Law Society, we are having this discussion, we can even empower our membership to actually help pick up some of our friends who have been arbitrarily taken to police because they are doing peer-to-peer trade, which is not illegal, but they fall victim to things like lack of KYC requirements that are mandated by the Financial Intelligence Authority, and they get into trouble. And not very many lawyers are actually equipped to help. So thank you very much. I hope today I've been as clear as I could be. I'm always worried when I talk about some of these things, I am in an echo chamber, but thank you very much.
Let's give Luis another round of applause. That was really wonderful. Thank you so much, Luis. I've personally learned so much about virtual assets. I always used to see people trading Pokemon. Is it Pokemon? And I'm like, okay, what's going on here and all that. But today I've got to understand what exactly is blockchain technology, what are virtual assets, what are the forms, He talked about coins, asset reference, for example, stable coins. He talked about real virtual assets, and I'm not the same again. And Luis, I'd like to also bring to your attention, I don't know if I had mentioned it, that I'm the program officer for professional development at the Uganda Law Society. I've received canes from you, and I really appreciate the positive criticism. But I'd like to make a vow that I'm going to try my best to see how we can organize a CLE training on virtual assets. I'm going to do that. I'm going to talk to the head of our department so that we are not coming to you 10 years from now. Luis, can you be our speaker 10 years from now? No, we're not going to do that. So thank you so much for that. And I'd like to also urge other people, the public out there, in case you have ideas and things that we can do to improve our CLE trainings, please always reach out. We always conduct a survey at the end of the year because we'd like to hear from the membership, because we'd like to be abreast. And as he mentioned, the Radical New Bar has ensured that there is digital transformation and digitization in the 4Ds: democratization, digitization, demilitarization, and what's the fourth? Hey, guys. Yes, thank you so much. So let's give Luis another round of applause. Thank you so much. And I'd like to take this opportunity to recognize the presence of our Honorary Secretary, Council Sally Babu. You're most welcome. We are so happy to have you here. Thank you so much for representing the Radical New Bar. We are so happy to have you. Yes. Without further ado, I would like to welcome our second speaker, who is online. Dennis, can you hear us? Okay. So, are you ready? I'd like to hand over to you.
Okay. Thank you. I will present the slides. I hope they will be visible that side. Someone told me if the slides are visible. Can you see the slides?
Yes, we can. We can see the slides. Yes.
Okay, thank you. And I would like to take this opportunity to thank everyone who has made this CLE event possible, and also allow me express my gratitude for the invitation, and also express my gratitude to the members who have been able to make it physically, and also to my fellow panel members. Apologies for not being able to attend physically. I would have loved to, but I got caught up in an earlier engagement. So please allow me make my submissions online. Before I delve into the presentation, and again, I would like to thank whoever participated in putting together this panel, because like the representatives on the panel have been highlighted to the audience, there are about 3 critical views or areas of virtual assets, as enumerated in the title or the subject for the panel to discuss. So we needed to have a lawyer to give the legal perspective or the legal look of things as far as virtual assets are concerned. We also needed to have a financial markets person to basically talk about the use cases. What can we use the virtual assets for in our financial sector? And we also needed someone to come and speak to the anti-money laundering aspects of virtual assets. Because like you hear the term virtual, they are not physical, but that said, they are assets which can be owned, they can be exchanged, they can be created, and the fact that they are virtual, they are hard to trace, and that brings in AML aspects. So thanks for putting together the panel. So again, I would like to speak about 3 terms which are really the basis of virtual assets. Then I'll delve into the presentation. The presentation will do a few definitions and the use cases to just orient the members or the audience about what virtual assets can be used for in the financial services sector. The 3 terms I would like to start off with. There is a term that is called traditional finance. There's also a term which is called centralized finance. And the 3rd term is decentralized finance. And the order matters in which I'm going to explain. The first term, which is traditional finance, basically includes the banks as we have them. We have the asset managers in the financial services sector, or call it capital markets. We have brokerage firms, we have hedge funds. And these, as they operate, they require or they call for greater regulatory scrutiny and consumer protection legislation surrounding the custody of customer assets. So that is the traditional finance, the way you know finance, the way any person who has not yet come into contact with a new phenomenon of virtual assets, what they know is what we call traditional finance. But beyond traditional finance, we do have what we call centralized finance. What makes centralized finance a bit different from traditional finance is that centralized finance includes a more novel lending, it includes more novel lending platforms and exchanges on which assets which are digital. Soon I'm going to explain the difference between digital and virtual assets. They are totally different. So under centralized finance, we have trading platforms, novel lending platforms, and we have exchanges across which digital assets can be exchanged. And in here, we do have a centralized intermediary that provides services to clients. So what happens is that under a centralized finance environment, if you need to buy an asset or you need to sell an asset, which is in most cases digital, you have to approach a centralized intermediary. It can be a broker, it can be a securities exchange, for you to be able to make a transaction. Moving on to the last term, which is decentralized finance. Now, today we are talking about decentralized finance, but the genesis of decentralized finance was the financial crisis of 2008, which brought to view the inefficiencies of centralized finance, because people trusted centralized finance so much to the extent that its inherent limitations were overlooked. It burst, that scenario burst the financial crisis. So after the financial crisis, the market started thinking about ways of how to avoid a future financial crisis and also find out solutions on how to navigate around the limitations of centralized finance system. And this birthed what we are discussing today and has been a topical issue since then, decentralized finance. So whatever we are going to discuss about virtual assets come from this term, decentralized finance. Like you hear the term decentralized, we are moving away from centralized finance to an environment where everything is decentralized. You can call it a self-service or a self-contained environment where you can transact, you can exchange assets, you can buy assets by yourself on a network which we call a blockchain, which I will explain further. Before I move on, I promised to talk about the difference between digital and virtual assets. Digital assets is the digital representation of any asset. Today, the common digital asset we have is mobile money, because money, being a fiat currency, is an asset because it contains value and it can be controlled. But now, using centralized finance, money has morphed into digital money or a digital currency. Your mobile money accounts you hold, what is contained on those mobile money accounts is what we call digital money. Now, the virtual asset on the other side is a further morphing of the digital assets by taking it or taking the transactions to be executed on what we call the blockchain, which I will explain. So please, as we talk about these terms, virtual assets are totally different from digital assets. I've just given one example, but there are many examples. My namesake, Louis, talked about securities. Today you can own shares through the Securities Central Depository Act. You can hold shares not on a paper form or a certificate of ownership of shares, but you can have digital shares which are maintained in a ledger in a centralized environment at Uganda Securities Exchange and also at Altex Exchange, that is for Uganda. But there are very many other forms of digital assets. That said, let me try to give a brief history about where we are coming from and where we are today as far as virtual assets are concerned. Like I said, following the financial crisis, the market, the global market, started to devise means of avoiding a future crisis and also to navigate around the limitations of a centralized finance system.
Sorry to interrupt,
what happened?
Dennis.
Yes.
Do you mind putting your presentation in presentation mode? The slides are frozen on one screen only, on one slide.
Okay.
Yes, thank you.
So, following these I'm giving remarks, I'll just run through the presentation after these remarks, which I'm about to complete. So, the history of virtual assets has been in this wise. Following the financial crisis, the market started to innovate around ways of avoiding a future financial crisis. And one innovation that has become a topical issue since then is virtual assets running on blockchain. What happened back then, because when the market started to push for financial transactions, exchange of assets to happen on a blockchain as opposed to running on a centralized financial engine or system, regulators kind of caved in. They were not very forthcoming with this new development. So, but the market didn't stop. They started operating, much as they were not prohibited from doing what they were doing. They started innovating and coming up with all manners of financial assets. Across the globe, most regulators banned virtual assets. And the case for Uganda was when Bank of Uganda stopped banks from dealing in cryptocurrencies. That was about 2018, and that has been the position since then. But of recent, when America got a new president, and that was Trump, they enacted what we call the Genius Act. With the United States being the benchmark for many aspects. When they enacted the Genius Act, which basically deals with the stable coins, as opposed to looking at the entire cocktail of virtual assets. For them, they concentrate or they focus on stable coins. But when America came up with this piece of legislation, we saw a number of other jurisdictions starting to pick interest. And as I talk, globally, we have the European Union. They have what we call the MiCA, markets in crypto assets. We have Singapore. We have other markets. They have enacted legislations to regulate this space of virtual assets and the use of blockchain. Africa, on the Africa side, we have South Africa. They have a law. I think some jurisdictions like Egypt, they did ban those assets, trading in their economies. Now, banning is not a good way to approach virtual assets, because even when you ban, given their nature, people still deal in them. Coming to East Africa, last October, we got Kenya, was the first East African country to come up with a law on virtual assets and virtual asset service providers. And yesterday, we had a cabinet decision from Rwanda, where cabinet approved the draft bill. So soon we'll be also having a law. And for Uganda, my colleague Louis has talked about the progress we've made so far. So let me take you through a few definitions of virtual assets and also talk briefly about the virtual assets use cases, and then I'll hand it over back to the moderator. So in terms of introduction, virtual assets do actually represent an evolution in the way economic value is represented and transferred. That is their preposition. To present a change in the way economic value is being represented and transferred across individuals. How is it done? It builds on what we call cryptography. Cryptography is a technology which provides security of transactions. You've heard about encryption. Encryption is just having a few codes here and there to make sure that the information about a transaction cannot be accessed by unless there has been authorized access. So this change in the way digital value or economic value is represented and transferred rides on cryptography, peer-to-peer networks, and what we call a distributed consensus. I will talk about these terms later on. And virtual assets do follow the transition from physical tokens, fiat money, to electronic-based ledger entries. And as we talk, they do play an increasingly important role in digital transformation of financial markets. Let me talk about a term called a blockchain. But let me first explain it from a very familiar and simple point of view. We've all seen a land title. A land title has got a block number and a plot number. So you find a block of land, but it has gotten very many plots on it. That is the basic infrastructure for a blockchain. So you'll find that on a blockchain, which is a software application, you find that there are very many blocks on this application, and these blocks are linked. That's why we call it blockchain. The linkage of these blocks, the extent that these blocks can speak to each other, is established by a chain. So that's where we come up with the term blockchain. It happens on a virtual network where we have a block, but with different nodes, call them plots, and they are linked by a chain. What is contained in these blocks is what we call financial transactions. So that is the blockchain on which virtual assets are created and traded and exchanged. So I will define the virtual asset, what it means. Then I will delve into the use cases, which are majorly categorized into digital currencies, call them cryptocurrencies, and also the tokenization of real world assets. And since my colleague Louis again talked about some of these, I will not spend much time on them. So by definition, virtual assets are digital representations of value that can be created, stored, and transferred electronically, typically using a technology called blockchain through the use of what we call a distributed ledger. The assets are used solely within closed ecosystems and not usually, assets that are used solely within closed systems are not usually considered virtual assets. I talked about centralized systems where you have your banks, you have your exchanges, and you have our mobile money. Okay, now the use cases. The first use cases for virtual assets was what we call cryptocurrencies. A cryptocurrency is a virtual asset which is based on a network that is distributed across a large number of computers. It is mined, it is offered across the network, and people can buy and sell using the different exchanges we have. All that, the buying, the mining, which is the creation part, the issuance, and the exchange is done on a blockchain. The decentralized structure allows them to exist outside the control of government or authorities. This is very, very important when it comes to virtual assets. The proponents of virtual assets don't want government interference in financial transactions. I will explain what government has done about it. So Bitcoin is an example of cryptocurrency. If you've ever heard about a Bitcoin, it is an example of a cryptocurrency. Now you have to note that cryptocurrencies are very, very volatile. They are even more volatile than the performance of the Uganda shillings against the dollar. They are so volatile. Volatility means that the value can go up and down numerous times. So again, another thing I can say about cryptocurrency is that in a cryptocurrency, all information related to the transaction is captured securely using algorithm protected cryptographically and stored and verified across the entire computer network. Let me try to speak to this, maybe to make it more simpler. Today, you have your bank account. Your bank account is centralized at your bank. For you to access it, you need permission to access it. With cryptocurrencies, you can access your account without any permission from a third-party entity. So instead of having a centralized database for third parties such as banks to certify transactions, cryptocurrencies rely on blockchain technology across a decentralized network to secure, verify, confirm, and record each transaction. There is no central issuance authority for cryptocurrencies, as it is for fiat money or physical money. They are instead mined and traded on crypto exchanges. Now, one shortcoming or limitation of cryptocurrency, as I said earlier, is what we call volatility. They are so volatile, the value keeps changing. So one way of navigating around that was the introduction of another use case, which is stable coins. Now, stable coins, as you hear the term stable coins, they were introduced to kind of offer a more protection to investors. So instead of just having a cryptocurrency or owning a cryptocurrency, which is so volatile, you can balance your portfolio by buying a few stable coins so that you can have a balanced portfolio of virtual assets. So stable coins, what they do, I will just explain this briefly. What they do, a stable coin, it is created, but its value is derived from the underlying securities, which is money in most cases, which is the fiat money of any jurisdiction in which they are issued. Currently, we have stable coins, but the underlying asset under there is the dollar. We have the USDT, the USDC. They are stable coins, but their underlying assets that from which they derive their value is what we call the dollar, which is the fiat money. Those are stable coins. Then, remember I started by talking about cryptocurrency. I talked about stable coins, which were introduced to cure the volatility in cryptocurrencies. But now remember, I talked about the fact that this is all operating in a financial system where the proponents of these virtual assets don't want any third-party intervention, no regulation, no what. So what happened is that the central banks looked at this innovation as a destabilizer of economies. What did the central banks do? They invented a project which is called central bank digital currencies. These currencies work like virtual assets, but they were introduced to ensure that fiat money is not eroded, or the trust in fiat money is not eroded. So what CBDCs do, these are issued by government, and they do mirror the value of a country's fiat currency, used to enhance financial inclusion and reducing transaction costs. I will emphasize those two because those are the major value propositions for stable coins and cryptocurrencies. financial inclusion, and reduction in transaction costs, so that we can have trading happening on a 24/7 arrangement or environment. So the central banks saw the advantages offered by stable coins and cryptocurrencies, and they came up with a substitute for them, which can also offer similar value propositions. So CBDCs, or central bank digital currencies, they do offer potential benefits such as financial stability, lower cross-border payment costs, and enhanced security compared to the private digital currencies. And unlike cryptocurrencies, CBDCs are regulated by central authorities. Now, another use case happening within the financial markets 101, if I may say, is what we call tokenization of real-world assets. Anything that is offered within the financial markets or capital markets can be tokenized. However, tokenization happens on the blockchain, and any other transactions also do happen on a blockchain. Let me just explain briefly the concept of tokenization. We all know what tokens are. A token is a smaller part of a bigger something or a bigger thing. So what happens is that, I will use an example of a real estate property. Let's say a hotel somewhere. Let's say a hotel like Sheraton Kampala. One person, if they want to buy Sheraton Kampala, they will need to mobilize a lot of capital to buy that property. But what tokenization does is that funds are mobilized to buy this asset. And then this asset is broken down into small pieces, which we call tokens. And they are sold to individuals. So you find one asset being owned by many individuals through small values that they invested. So that said, asset tokenization is a process of creating a digital representation, which is called a token, of a real-world asset, and this all happens on a distributed ledger through blockchain. These tokens are programmable. My colleague talked about smart contracts. That's how they are programmed. Traceable and can be transferred on a peer-to-peer arrangement. Each token acts as a digital certificate of ownership or a claim to a portion of an asset. And like I said, everything that is offered within the financial markets can be tokenized. This is another use cases of tokenization. Hopefully the slides will be shared. You read through, and I think that is it. I thank you for your attention. I'll wait for any questions as they arise. Thank you so much. Over to you, moderator.
Let's give Dennis another round of applause. Thank you so much, Dennis, for that very insightful discussion. Would like to urge all of you here in the audience or online, in case you have a question, just post it in the chat, or you can raise your question so that our speakers are able to tackle those questions before they leave. Thank you so much. So we're going right to our next speaker, who is Mr. Edward Amanyire, the Manager, Strategy Analysis and Statistics at the FIA. You're most welcome, Mr. Edward. Let's give him a round of applause as he comes. Thank you so much.
Yes, good afternoon to you all. Yes, my name is Edward Amanyire. I bring you greetings from the Financial Intelligence Authority, from our Executive Director, Mr. Samuel Owere Wandera. And he sends his greetings. He's unable to make it, so he requested that I am able to step in for him and support the RNB in creating awareness on virtual assets and also virtual asset service providers. So I'm happy to be here, and thank you for inviting the Financial Intelligence Authority. Yes, so I have structured my submission. I was informed that I have about 20 minutes. I've structured the submission of FIA in about seven sections. I will start with the first section, which is the introduction about FIA. So the Financial Intelligence Authority is a body corporate. It's a government agency, also funded by the government, incorporated or established in 2013 under the Anti-Money Laundering Act, that is CAP 118. And the core mandate is to receive, analyze, and disseminate financial intelligence to law enforcement agencies like the Uganda Police Force, the Inspectorate of Government, the Uganda Wildlife Authority, the Uganda Revenue Authority, as well as work with our regulatory partners like Bank of Uganda, Capital Markets Authority. I saw my wonderful colleague Dennis presenting. We work with him a lot, and his CEO, the Insurance Regulatory Authority, the Lotteries and Gaming, the National Lotteries and Gaming Regulatory Authority, the NGO Bureau, among others. We also work with the private sector, of course, all the different associations like the Uganda Bankers Association. You will have the Financial Technology Service Providers Association, that's FITSPA. You have the Blockchain Association in the case of today's subject. We work closely with the president and the vice president and all the different stakeholders of the Blockchain Association of Uganda, as well as so many other stakeholders, the ministries, governments, and departments. So with that in mind, I want to take you back briefly on the principles of money laundering, or fighting money laundering, and also combating terrorism financing, combating proliferation financing. So most of us might understand money laundering as simply the process through which dirty money or money obtained through criminal activity might be concealed or disguised into appearing to be legitimate or coming from a legitimate source. But we also have terrorism financing. Terrorism financing is where either an individual or a group has been financed, and the financing in this case is either financial or through other forms of support, in order for them to conduct an act of terrorism or for them to facilitate activities or operations of a terrorist organization. So we do have designated terrorist organizations in Uganda, like the Allied Democratic Forces. Most recently, they've been calling themselves ISCAP, that is Islamic State of Central Africa Province, among others. Then we have what we call proliferation financing. This is basically financing activities of weapons of mass destruction. And most cases, this is in line with stopping countries like the North Korea or DPRK, Democratic Republic of Korea, or the Islamic Republic of Iran. So those are the key fronts where FIA comes in to support, to stop money laundering from happening, to stop terrorism financing from happening, and to stop proliferation financing from happening. And whereas money laundering in most cases involves a lot of money, proliferation financing and terrorism financing don't involve a lot of money. You will be surprised as to how much was involved in the terrorist attack that happened in Uganda on 21st November 2021. The amount of money in the twin bombing at Parliament Avenue, as well as the Central Police Station, very little money. So it means that when it comes to terrorism financing, we are really not focused on how much, but the purpose of what those funds are going to be used for. That's why in most cases when you walk into your bank and you cannot explain the source of your money, or you can't explain, or when you're trying to withdraw it or to make a transaction, they ask you for two things. They ask you what is the source and what is the purpose. Source, they are trying to cover money laundering, that the money you have has not been sourced from a criminal activity. That's why they ask you for the source. So you'll find people saying savings, saying business, saying salary, and these are legitimate sources of income. But then there is a second part where they ask you purpose. What are you going to use this money for? Here they are trying to combat terrorism financing as well as proliferation financing, because you might have generated this money from a genuine source, but it is going to be used for terrorism financing, or it's going to be used for proliferation financing. So I wanted to give that bit of a background. And with Uganda follows the international principles of an organization called the Financial Action Task Force. This is an organization that was brought together by the G7 countries. G7 countries are some of the most powerful countries in the world, or countries that influence how the different agendas of the world operate. The United States, the United Kingdom, France, Germany, Italy, Japan, among others. In total, there are 7. So they came up with what we call the 40 recommendations. These recommendations help different countries to fight money laundering, fight terrorism financing, and also fight proliferation financing. And among the recommendations, I can't explain all of them to you, but the focus should be on recommendation 15, which touches new technologies. That is the business of why we are here today. The Financial Action Task Force established that at one point there will be new technology. So as we fight money laundering, as we try to combat terrorism financing and proliferation financing, new technology might come, innovations might come, new ways of how money can move might come. Technology is always evolving. What can we do when this new technology is in place? So with the introduction of the virtual assets in 2008, obviously it took a while because adoption took a while. Adoption in Uganda on virtual assets was first registered somewhere around 2014. That's when we saw a lot of virtual assets being used in Uganda. And it was until 2019 that the Financial Action Task Force came out with a clear paper, clear guidance for the rest of the world. So they said that virtual asset service providers, these are the businesses that are involved in the business of virtual assets, should be treated the same way we are currently treating financial institutions. So financial institutions like the banking sector, the mobile money sector, among others, that is the same way we should also treat the virtual asset service providers. And therefore, in late 2020, the Anti-Money Laundering Act of 2013, CAP 118, was amended, and they included virtual asset service providers as accountable persons or reporting entities, meaning that while we were requiring commercial banks, insurance companies, casinos, dealers in precious metals and stones, accountants, among others, forex bureaus, money remitters, to report to FIA, to register and report suspicious transaction reports, among other reports, that the same should now be done by the virtual asset service providers. So, with that intervention, we had to first do what we call a risk assessment. It's again a requirement for all countries around the world to understand the risk that virtual assets pose in their respective jurisdictions. While our neighbors might be having virtual assets operating in their countries, we needed to confirm, do we have virtual assets operating in Uganda? And if we do, to what magnitude? What are the volumes being transacted within Uganda? How much of virtual assets are entering Uganda? How much of virtual assets are going out of Uganda? So, late last year, we had Cabinet approve the report on virtual assets and virtual asset service providers national MLTF risk assessment. It means that as a country, we now understand what virtual assets pose in terms of money laundering risks. We welcome innovation, we welcome new ways of doing business, but remember, as you welcome these new ways of doing business, we've seen the benefits of virtual assets. They are faster, they are cheaper, they are more transparent, and in most cases, they are tamper-proof. You cannot manipulate transactions. You cannot change a record that has already been done in terms of the blockchain technology and the distributed ledger technology. So we saw all the benefits that came with this new technology known as virtual assets. But on the side of combating money laundering, we also have to look at the risks. Faster technology means that a criminal who was previously getting delays in the banks now has an opportunity to move money all around the world very fast. So while you embrace it as a new technology, the criminals are also embracing it. So we've seen ransomware. Previously, ransomware would be paid to bank accounts. Now, ransomware is being paid through virtual assets. You will find that a website of a company has been taken over by cyber criminals. Hospital systems have been taken over by cyber criminals, and they say that we will not hand over back your systems until you pay this amount of money. And they provide a virtual asset address, which sometimes is traceable, sometimes it's untraceable. So it means that whereas this new technology came, the innovation was good, the possibilities of it doing good work are many. We also see that criminals are using it. And I will quickly take you to, if you can quickly Google crypto crime in the world, you will be surprised. From one report, we saw that in 2020, crypto laundering or money laundering related to virtual assets was to the tune of 10 billion United States dollars. That was in 2020. And in 2025, this is just 5 years apart, it had rose to 82 billion United States dollars. This is money laundering related to virtual assets. So, while we discuss the opportunities and the benefits of virtual assets, we must also look at how do we protect our jurisdiction, how do we protect our country in this space, and ensure that the players who are involved in it are using it for good and not using it to advance the criminal enterprises. So that brings me to my next section. The findings of our report of the national risk assessment that was conducted on virtual assets and virtual asset service providers. Remember, the main objective was to understand the risk. But more importantly, we wanted to understand, within the realm of virtual assets, which virtual asset poses a higher risk than another. In terms of virtual asset service providers, which virtual asset service provider poses a higher risk than another? And we were able to establish that Bitcoin was the most used virtual asset in Uganda. Most used in terms of transactions, Bitcoin had the most transactions linked to Uganda. But in terms of value, the United States USDT and USDC, what we call stable coins. My colleague Louis Chizito talked about them, had the most volume in terms of the transactions were fewer, but the value of those few transactions was higher. So it meant that Ugandans were embracing Bitcoin, but they were also embracing stable coins. These stable coins are issued by companies based in the United States. And they were operating these mostly on what we call exchanges. Exchanges like Binance, among others. So it then begs the question, do these companies know who they are dealing with? Because you cannot control a virtual asset. You cannot regulate Bitcoin, but you can regulate the service provider who offers, who trades, who exchanges, who stores, who issues that virtual asset. So, different countries have come up with laws, and Uganda is also in the process of coming up with a law on virtual asset service providers. And that would mean that being able to conduct KYC, know your customer, understand, do customer due diligence on your customers, establish who they are, the purpose of why they are opening that account, understand what they are going to be using that account for, and most importantly, track them to ensure that money laundering is not facilitated through those systems, or terrorism financing or proliferation financing. I'm happy to also report that as a result of that risk assessment that we did, the Cabinet of Uganda gave a go-ahead for the country to put in place this legal framework, or begin the process of drafting instruments for regulating virtual assets and virtual asset service providers. So, again, working closely with the private sector and the public authorities, FIA was able to come up with that report. We worked closely with all our colleagues in the Blockchain Association of Uganda, FITSPA, among others, and as well as law enforcement agencies, the Uganda Police, the Uganda Revenue Authority, to ensure that we have a credible understanding of our sector. As I conclude, I would like to talk about the way forward as practitioners, as lawyers, as legal advisors. What do you take home from this? First of all, to remind you that lawyers are also considered accountable persons. Are we together, colleagues? Lawyers are also considered accountable persons, because lawyers, in some cases, transact or carry out transactions on behalf of their clients. And sometimes, in the course of you trying to conduct a transaction on behalf of your client, you might actually realize that this is a suspicious transaction. So you're required to actually file that suspicious transaction report with FIA. So the way forward for me here is for you to take note that the money laundering and terrorism financing risks related to virtual assets are real. We are seeing them in our country, not just abroad, but we are seeing them in our country. And to let you know that if you're going to be advising your clients, because I know most of you might be advising your clients on setting up a company to begin operating the business of virtual assets, it's important for you to advise them that they must register with FIA, because they are accountable persons by law. You must advise them on how they should be able to establish a compliance framework, AML CFT compliance framework, have in place policies, appoint a money laundering control officer, among others, have mechanisms through which they can be able to track transactions. And most importantly, they should be aware of the different consequences that come with non-compliance. We've seen this at a global level where major players, virtual asset service providers at a global level have been sanctioned. We've seen India sanctioning, we've seen the United States of America sanctioning, Canada has sanctioned, South Africa has sanctioned, and many other countries have sanctioned virtual asset service providers as a result of the breaches arising out of not following the anti-money laundering or the countering of financing of terrorism principles and the laws governing their respective countries. Yes. I believe that marks the end of my submission. I hope there isn't much that I have left out. Maybe also to give you a brief background on the term virtual asset. The term virtual asset was first used in 2019. Before that, there were different words. They were using terms like cryptocurrency, they were using crypto asset, but the Financial Action Task Force, this is the global standard organization which I talked about earlier, advised that we can only use the term virtual asset because cryptocurrency had the word currency, and currency can be misunderstood to be backed by a government or a central bank. So the word currency was dropped. And also digital, my colleague Dennis talked about digital asset. It's different because this is mostly where we are talking about fiat that is now electronically converted into digital form. But so the term virtual asset was developed for purposes of uniquely identifying this space. So there was previously no other space that was using the word virtual asset. And that's why moving forward, we are now using the word virtual asset. And I'm happy that even in this very forum, we've adopted the term virtual asset. I submit. Thank you. This report for the risk assessment is on the FIA website. Please download it and take time and read it and understand the money laundering and terrorism financing risks associated by virtual assets and virtual asset service providers in Uganda. Thank you.
Let's give him another round of applause. Thank you so much for that wonderful presentation, Mr. Edward. I believe we're learning something, yeah? This has been very insightful, and there's so much to learn. Yes. So I'd like us to ask questions. Are there any questions in the room? Yes.
Yes, hello, everyone. It's me, the citizen, to whom you are all accountable for. And every week at the Red Economy, we shall hold you accountable. Yes, Mr. FIA, how are you? Do you know me?
No, I don't know you.
Well, when you go to your FIA records, you'll find that there's only one Ugandan certified chartered accountant who is also certified in Singapore. And in the whole of Africa, I'm the only one. I developed an accounting standard for Singapore, and they adopted it as part of the team that created a new accounting standard. You know, different countries adopt their international accounting and financing standards. Now, you talked about, thank you, crypto and financing, illegality, money laundering, and all that. And we thank you so much for enlightening the few people. Now, my issue that I have, you see, we had tax avoidance and tax evasion. Now here you're at, terrorism financing, illegality. And as an accountant, I can tell you, I am very good at, this is not an admission, but I'm very good at making illegal currency look legitimate. And I believe most accountants are. My problem is, you've given us all these laws, all these things, and they look nice on paper. But the question is, do you have the capacity and the resources, not only in Uganda, but liaising internationally with all the other organizations to be able to curb the money laundering, to to be able to regulate the cryptocurrencies that have flooded the market. I think almost every month or two, there's a new cryptocurrency. You talked about Binance, and I think we all know what happened to Binance and how it went, the direction that it went. So you are not able to do that. And secondly, how will you prevent the loss that people are suffering? Because most Ugandans pretend that they know what they're getting into, but they don't. They end up losing a lot of money, and they don't have any recourse because money went into a computer. You saw the margins moving, suddenly they tell you, oh, the market has crashed and you don't have money. So what legal recourse do you have for people who are going to lose a lot of money from these online cryptocurrencies and platforms, and they don't have any legal recourse, especially because Uganda does not have a court or a legal framework or any sort of framework to regulate these and compensate the people who could be duped, who could be conned, who could fall victims of such, on fraudsters, especially in the cryptocurrency world, as you very know, are very many. Thank you.
Should I answer that or I wait?
Yes, please, you can answer.
I don't know if Dennis is online. If he can hear me, maybe he can support me on consumer protection on the second question. But the first question was on do we have capacity as a government to curb money laundering and terrorism financing in this space? We are doing our best. As you know, capacity is about the different challenges that you might be facing at the time. So initially, there was little to no action on how to trace virtual assets online because everyone believed that virtual assets were anonymous and the people who are transacting in them cannot be known. But we've since discovered through different tools that we can actually know who is behind a specific transaction. So FIA has continued to build capacity in this space. We can't say we are 100% there, but we are currently at a point where we are able to trace who is transacting in this space. And we are also working closely with our partners, both in law enforcement and intelligence community, in ensuring that the space of virtual assets is not abused. So we've supported Uganda Police on a number of cases where they've been able to actually trace and identify suspects behind virtual asset transactions, real life cases. Some of these cases have now actually advanced to ODPP for prosecution. So in the space of capacity, we can't say we are 100% because even the first world law enforcement countries, they are also still improving themselves. But we are in a place where we can comfortably trace, identify, and track the abusers of this space of virtual assets. Of course, I cannot confirm or deny what tools we are using, but I can only say that we do have tools, and beyond the tools, we have international partners. FIA is part of a global community called the Egmont Group, where we work with FIUs in different countries. And these FIUs, they've also been building capacity in tracing and tracking abusers of virtual assets, and we work closely with them. So where we are unable, we do have our partners in those countries to support us. But also our law enforcement officers have been well trained, especially the cyber crimes unit under the CID, the special investigations unit in the Inspectorate of Government. There is a special investigations unit in the URA and tax investigations department in URA, and they are at a good level of being able to handle these cases. So I hope that can suffice. On prevention of loss, obviously it's a work in progress. It starts with regulating the space. So if we have a law in place, then the law usually covers consumer protection. It covers entry requirements for companies that are going to be regulated in this space, the directors, the shareholders. We need to ensure that whoever is involved in this space, due diligence is done, background checks are conducted to ensure that criminals are not allowed in this space to be able to transact freely. And what we are doing right now is just the awareness. CMA has been doing a lot of awareness, putting out notices of caution. Bank of Uganda has also done it. Ministry of Finance has also done it. FIA has equally put out circulars where we warn the general public not to engage in this space for the primary reason that it is not regulated. But we've also gone ahead to put up a public portal where members can be able to report cases where they have been defrauded of their money in order for these investigations to be done. And police is also available to support, and the regulators are also available to support. So there is work that is currently happening, but most importantly, creating awareness like the one we are trying to do right now. Thank you.
Thank you so much, Edward. Dennis, would you like to answer the other part of the question?
And the question is concerned, but I would like just to make a statement. When it comes to discussion of our capacity to handle this space, I think it's premature for us to discuss capacity. We are in the process of making ourselves ready, and having a law in place will position us now to start to discuss the capacity issues, because we don't have a law to govern the regulation or even supervision of virtual assets. But what we are doing in terms of investor protection is really to create awareness, like Edward has rightly said, make people aware of these assets and the offerings that can come their way, and enable them to make the right choices or decisions. And also we are working with the law enforcement agencies like police, the CID, to ensure that we handle the abusers of this space who create pawns and pyramid schemes under the guise or under the space of virtual assets. That's what I had to add on to Edward's response. Thank you.
All right, thank you so much, Dennis. Yes, we have other questions coming in. For Louis, we have a question from Sylvia Nyangoma, who says, how can a layman start trading in Bitcoin? What are the sites or avenues that one can start looking into to increase their monies? And there is also another question for Louis. It says, from Deo Kamya, he says, Louis talked about the meeting with stakeholders to draft a law on virtual assets. Does that mean that virtual assets don't have a law in Uganda? So people who are trading illegally? So those are two questions, and they are directed to you, Louis. Should I repeat them?
No, they are clear enough.
Okay.
I'll start with the second question on lack of a law, people are trading, does that mean it is illegal? I think we all know in this room that what the law does not explicitly ban is not prohibited. So it's a gray area. It being a gray area only creates uncertainty. I'll give you an example. And please, Edward, I think you should also text this, because I think we've had this discussion before with Edward, though he will not agree with me publicly. Because of no law, the market has had fragmented communication from government stakeholders. I'll give you an example. In 2022, Bank of Uganda released the infamous circular, which was mandating banks and licensed payment service providers not to deal with crypto assets or crypto asset service providers. That is one. Now, in 2020, 2 years before that circular came out, Financial Intelligence Authority went to Parliament and they amended the Anti-Money Laundering Act under Schedule 2 to make virtual asset service providers accountable persons. Capital Markets Authority, and I'm sorry, Dennis, if you may not agree with me on this, didn't know what was going on generally. They didn't know what was going on, and it was not a discussion they were having internally. Now, how do you enable, this was a dilemma for market players. How can I be an accountable person at Financial Intelligence Authority when, as a virtual asset service provider, I cannot open up an account because Bank of Uganda has made that pronouncement? So what that did is that it drove very many people into peer-to-peer. And I think the statistics from the report that was ably designed by the Financial Intelligence Authority shows that the number of peer-to-peer crypto means you do not go through an intermediary like an exchange. Primarily, you wait for a peer who has USDT and a stable coin, and maybe, Louis, I have dollars or shillings, and you just exchange without that kind of arrangement. So, because there is no law does not mean it is illegal. The only problem we have is that, like I told you, a reason why I was slightly late is that there's a colleague friend of mine, one of my services, he deals with peer-to-peer crypto. And just a few moments ago, I think he's at Chivuli right now, and the reason is in line with the Financial Intelligence Authority's mandates. He got money, illicit money, through his peer-to-peer transfers, and somehow they got to him. And what is happening lately, the police is dealing with these people in a very unprofessional way, if I'm to be a little bit mild. So it is not illegal to do crypto. Though for me, I'll put a caveat on that. If you're a peer-to-peer crypto trader, kindly pay attention to the accountable person's requirement. It's not a licensing requirement, and I think Edward can agree with me on this, but it is more of a KYC requirement. Because in 2022, in December, I think a bank was hacked. I'm not going to mention which bank, but I even think Edward knows this. And the Chinese people that hacked that bank, $300,000, they did something called a money muling tactic. Money muling is a money laundering tactic where you hide money behind persons that are quite a number. You divide the money you have stolen into quite a number of people where they cannot take the transaction back to you. So they hacked that bank, and quite a number of friends of mine who are peer-to-peer traders ended up at Chivuli. They were in cells for weeks. Why? Because they did not understand KYC requirements. So for me, I would say if you're a peer-to-peer trader, there are two things you should do. One, make sure, because peer-to-peer crypto traders are very lax on KYC. And already our law under the Anti-Money Laundering Act actually recognizes KYC for virtual asset service providers. So the centralized exchanges like Binance are trying their best, because I'm even reliably informed that URA now got information about Ugandans trading on Binance, and it has sent letters out to them to file tax returns. So, but for me, I would think that if you are a peer-to-peer crypto trader, at some point you will want liquidity from Binance. At some point you will reflect, and that data will be picked up by Financial Intelligence Authority, because they have the tools. Financial Intelligence Authority, I'm not going to speak for them, but Chainalysis, it's a blockchain intelligence company. I think it is based outside Uganda. It developed tools to actually trace people who are doing. You know, in crypto, if you hold the asset, you are anonymous. You are pseudonymous, but you're not anonymous. Pseudonymous means you are hiding behind a string of 24 characters. Your name is not there. Like in a bank, if you open up an account, they know Louis Chizito is. That's his name, that's his age, that's his profession, that's his law firm. They know the details. In a crypto transaction, you are hiding behind a string of numbers. So, but with blockchain intelligence analytic tools like KYT, that Financial Intelligence Authority and Good Authority actually has, because they subscribe to some of these tools, they will get you, and before you know it, they will pass the information over to URA. So, trading crypto is not illegal, but for me, the peer-to-peer crypto traders are the majority in this country. I would just advise them to pay attention to KYC. And dealing with financial intelligence authority is not as complicated as dealing with capital markets authority. Sorry, sorry, Dennis. But they're a little bit more understanding, and they actually know these things. So if you go to them, they will guide you on KYC and how you can maintain KYC AML measures within your ecosystem so that you do not get illicit funds, and then you can do your business as the law prescribes. So it is not illegal. Now, the first question was, how can someone trade? I wish there was someone who is a trader, but I'll answer that question this way. If a person wants to trade Bitcoin, Ethereum, or even you want to hold stable coin, I would encourage you to go to one, through centralized parties. There are centralized exchanges like Binance. Binance is one of those fairly reputable crypto exchanges that also has KYC requirements. They have fairly good customer care. I'm not going to say consumer protections, but customer care. So if you're going to trade, for a beginner, I would rather you go through a trusted third party like Binance, because Binance is internationally recognized. It's not licensed in Uganda. It used to be on our at URSB, but they wound up because of this confusion I've just explained. Bank of Uganda, Financial Intelligence Authority is doing its best. Bank of Uganda is doing its best to make sure FIA does not accomplish what it has to do. CMA literally has no idea what's going on. So for me, I'm thinking that if you're trading, go through a trusted third party. Make sure that you do not keep your assets on the exchange. Then do some education. Don't just trade, because even in mainstream finance, they encourage people to undergo a certain education. Just because there is a frenzy and the Bitcoin price is at what, 69,000 now, it has fallen off from 100,000, you want to jump onto the bandwagon, I would think you should take off a year. Understand the mechanics, maybe go through a third party, then understand the modes of custody. There is self-custody, because when you are custodying an asset like Bitcoin through your own wallet, which is not in the control of maybe a centralized exchange, there you have total control. But the problem with that is that if you're not well educated, you can, in case you lose your private keys, you will not know, and maybe you don't even know how to generate the seed phrase. You may not know how to safeguard yourself. So take off a year, understanding. We have the Blockchain Association of Uganda. My friend Reginald is very active in that space, who's the president. They will take you through the trusted parties, how you can actually trade, which tools you can use to avoid problems, because lately we have something called the CAF. I think Edward knows it. CAF is a common asset something framework, where through our automatic exchange of information regulations or act, information is coming to Ugandan officials through the partnerships that they have. I don't think Uganda is signed up to CAF yet. They haven't, but we have the Automatic Exchange Information Act, which even when you're trading on a platform domiciled in maybe Bahamas, like FTX, which collapsed, they get this information. They can get with time. They may not get it today, but 10 years down the road, they will tell you, guy, you traded and we're seeing information. Yeah, like what? Because I'm told 3 weeks ago, there was a meeting at URA, and people who didn't even know that URA would ever get to know them were given letters. So trading is not illegal. The law will come probably by end of year, because the cabinet passed the resolution. But that doesn't mean that there are no industry-based practices to protect consumers, which are not grounded in our laws. You get? Because even countries like that have these laws, Kenya, Namibia, Botswana, Hong Kong, even MiCA, we talked about the EU, they have something called passporting and mutual recognition. That if you're registered in the US and maybe you're trading from the EU, There is mutual passporting where they recognize that much as you're not licensed in the EU, they're licensed in the US, they can still get that information and protect you as is. Because I'll give you an example, stable coins literally have the same rules. A stable coin, according to MiCA, has the same rules in the stable coin according to the Genius Act. How? They don't give you something called yield. It's not a yielding asset. Yielding is paying you for holding an asset, like the kind of interest you receive on your mobile money every few quarters. For virtual assets, once you hold a stable coin, there's a universal rule that it doesn't pay yield. So some of these rules are there. So how do you get to know these things? Education is the first point, and then that's how you get to know the trusted, as a beginner, trusted intermediaries. So I don't know if I've answered the question adequately.
Thank you so much, Luis. You've answered the question very well. You have to be educated about it. And whereas there is a gray area in that field, you shouldn't fear. I mean, there is no law against it. Yeah. And in regards to the other question about whether people are trading illegally in it, those who don't know about it, yeah. He talked about knowing your client, yeah, to avoid you falling in trouble with the FIA and the police. So thank you so much, Luis. We also have a question from Okot Emma, and I think this question goes to Dennis. Dennis, I hope you're online. It reads, many people are investing in unit trusts, government bonds, etc. Is it safe or advisable for one to start saving or investing through crypto, or is it highly risky? Dennis, were you able to get that question, or should I repeat it?
Yeah, I got the question. Thank you. Can I respond?
Yes, please.
Okay, thank you so much. From my presentation, I made kind of a precaution to the members that virtual assets, by their nature, are generally volatile. Now, it depends. Volatility is not a very big problem in financial markets, but you need to be risk assessed so that your advisor who's helping you to buy any asset, regardless of whether they are virtual assets or the traditional assets like unit trusts, so that the person who's helping you to buy those assets can know which risk category you are in, whether you are risk averse or you are a risk taker. Depending on which continuum you belong to, they can advise you on the right assets that you can buy. Now, going specifically to answer the question whether unit trusts are safe, and generally answering this, unit trusts are safe. When you look at the ring fencing around the unit trust as a product, there are so many layers of protections that are inbuilt in the structure of unit trusts. Allow me to talk about them. We have 3 parties working together to ensure that unit trusts are offered or are issued in Uganda. We have a manager whose role is to advise on how to invest the monies collected by Ugandans in any scheme. Then we have the custodian who handles the assets. When you contribute money to a unit trust, that money does not go in the books or in the hands of the manager. The money goes to the custodian, which is a bank, and the manager will just issue instructions to the custodian on where to place these assets. But that said, the assets are not recorded on the custodian's balance sheet. They are held in a custody account. And on that custody account, the assets are protected by the Deposit Protection Fund. Another layer of protection that we are about to implement is what we call the Investor Compensation Fund. This fund will provide an additional layer of protection to investors in unit trusts who will suffer or who may suffer pecuniary losses as they transact in that segment of the market. The other layer of protection which is currently existing are the trustees. We do license trustees to oversee the compliance and administration aspects of all unit trusts in Uganda. So if you ask me that unit trusts, are they safe or not, I would say they are safe. And since they are not volatile as virtual assets or cryptos to say, I would say that they are safer than virtual assets, or call them cryptos. Thank you.
Thank you so much, Dennis. We've really learned so much, and I believe we are learning. Are we? Are we learning something? Yes. Thank you so much. So I'd like to take this opportunity to thank our speakers so much. Thank you so much for your time and for the in-depth research and knowledge that you have shared with us today. Some of us didn't know really a lot about virtual assets, digital assets. Today I've learned about tokenization, materialization. I'm definitely writing an article because I feel like I'm almost an expert, but I have to first share it with Louis so that I don't, so that you know you're knowledgeable. Yes, but thank you so much. I'd like to request our speakers to first take a group photo. I know one of our speakers really is time bad, and as our tradition here, we usually take a group photo to document this. So I'd like to welcome our speakers together with our council member to just take a group photo together, and then we'll go on to the next topic. Yes, thank you so much. Who is taking the photo? Maybe you can guide how we are going to stand. Are we here?
This is fine. We just have to be evenly. Standing between the jacket.
But maybe let me just say one thing on consumer protection. Now, this is going to be my closing remark. Okay. Most of you gentlemen and ladies followed the collapse of a cryptocurrency exchange called FTX. Okay, you heard it in the news. If you, even in Uganda here, newspapers wrote a lot about it, 2022. Now, when that exchange collapsed, it was because of poor corporate governance. That's why you should know who to trade with and who to trust. It collapsed because there was this gentleman called Sam Bankman-Fried. He actually was intermingling assets of his own other companies and the clients that were on his exchange. So when it collapsed, right now there is a recovery process, an insolvency process going on by the joint official liquidators of Bahamas, even in Delaware. But this is the point I'm trying to make. Because of that, when the company collapsed, everyone who had assets on the exchange, like I said, rarely are traders told to keep assets on the exchange, because once you keep assets on the exchange, some of the terms and conditions of those exchanges tell you that the assets you keep with us, in case of insolvency, they are not yours. So you will end up claiming legally as an unsecured creditor. And so for those of you who know our insolvency law, there is a waterfall of distribution. They begin with secured creditors, unsecured creditors, then maybe URA comes in there, then maybe the official receiver is also somewhere in there. So by the time they reach an unsecured creditor, the money might not be enough. But for FTX's case, the money was enough, and they even added an interest of about 100%, because the Bitcoin price at that time, when FTX collapsed, was $16,000. By the time they are recovering, it was about 50 or 40,000 USD. Now, in the capital markets, and I think Dennis knows this, in the capital markets, the difference is, if I am investing in a unit trust, or on a stock exchange, or I have bought things generally in the capital markets, if the issuer, let us say Old Mutual, goes bust, the assets that I have bought are not on the balance sheet, or are not owned by the fund manager. They are kept by a custodian. You get? Once in the capital markets, let us say if today one of the biggest unit trust companies goes bust, their monies are not on that balance sheet of Old Mutual. They have literally kept your assets in a custodian, which is a bank somewhere else. So if it goes bust, they will get those assets. They are there, they're intact. Because in the capital markets, they deal with something called assets under management. They are managing these assets on your behalf. They are yours. So they're not on a balance sheet of the person who is actually giving you that. So they're on the balance sheet of maybe in a bank. So once it goes bust, those assets will just be transferred to another broker, another fund manager, another person. You will have them in that amount. In the crypto space, because we have been struggling with issues of market structure, no law, that arrangement in the capital market space where if, let us say, an exchange goes bust, or a custodian, a third party is hacked without insurance, those assets, you may have to claim them as an unsecured creditor, because you have to read the terms of use of those exchanges, of those third-party custodians, because without market structure in our law, and if these guys go bust, at best you will get your money as someone who is an unsecured creditor, and that comes with these uncertainties. Not like in the capital market space, if Old Mutual goes bust, people at CMA know that your assets are already somewhere, not on the balance sheet of that, they're already somewhere, and they can just be managed and taken to another broker, dealer, fund manager. That's different. So investor protections can only be robust. They are industry practices, but they cannot be robust when they are passporting rights. For instance, passporting is normally used in the EU. For instance, if you're licensed in the UK, that UK framework can be used automatically to protect an investor in Uganda if there is some sort of mutual recognition of Uganda, which law is not yet there. So for now, you'll be protected by industry-based practices that may not be grounded in law. Sorry I had to say that. I had to say it because someone sent me a message. So thank you.
Wow, thank you so much, Luis, for that clarification. Yes, I'd like to take this opportunity to thank you all once again, as speakers that have been handling the topic, understanding virtual assets, legal recognition, risk, and regulation. By now, we know what is a digital asset, what is a virtual asset, what is blockchain technology. Yeah? Yes. So without further ado, I'd like us to go to our next topic, which is in insurance. So we're going to handle the topic that is beyond malpractice, the strategic value of professional indemnity insurance for law firms. I know many of us may have done insurance law in law school, but today we're going to understand the basics of, the basics of a strategic value of professional indemnity, insurance for law firms. And here with us, we have our wonderful speaker that has been here, and I'd like to just briefly read his bio. So he's called Mr. Ismail Mukasa. Let's first give him a round of applause. Thank you so much, Mr. Ismail, for coming all the way. Yes, Mr. Ismail Mukasa is the operations manager at Artemis I hope I'm pronouncing it well, Artemis Insurance Brokers Limited. And Mr. Mukasa is an insurance executive. He holds a bachelor's degree from Makerere University, a diploma in insurance, and has various certificates in leadership, sustainability, and corporate governance. He's a member of the Insurance Training College, a member of the Institute of Corporate Governance, Uganda, and a member of the Chartered Insurance Institute, UK. He started his career as a direct sales agent and grew through the ranks to a business development manager, a national sales manager at Life and General Insurance, and then a CEO at CIC Africa Life Insurance Limited. Wow. He has served as a sustainability consultant, and currently he is the operations manager at Artemis Insurance Brokers Limited. Mr. Mukasa is also a Rotary leader and has been a Rotarian for the past 16 years. He is a member of the Rotary Club of Kajansi, where he has served as past president and assistant governor. Wow, let's put our hands together to welcome Mr. Ismail Mukasa. Thank you so much for being here with us. Yes, you're most welcome. Sorry for that, just a quick one. We have a slight change in the program. We'd like to welcome the president of the Uganda Law Society, Mr. Isaac Semakade. I've been informed that he's around. Yes, but before I'd like to take this opportunity to invite Mr. Sali Babu to come and welcome the president of the Uganda Law Society.
Good afternoon, all. With great honor and pleasure, I wish to thank the previous speakers, that is to begin with Dennis, Edward, Louis, and in a special way, welcome the President of the Uganda Law Society, Mr. Isaac Chimaze Semakade, SC, to address us, and thereafter we shall proceed with remarks from Mr. Ismail. Thank you.
Thank you very much, my colleague, council member, our secretary, our acting secretary, Mr. Babu. May I get any confirmation that I'm audible and visible?
Yes, Mr. President, we can hear you loud and clear.
All right. Okay, am I also visible or not?
Yes, you are.
Okay, thank you very much. Again, apologies to our guests for the second and probably third panel for whom I have had to interfere very unceremoniously. It's not out of disrespect, but largely out of respect for the guests we have for the 5th RNB. All of you are very special. I wanted and I appeared for this very reason, in acknowledgement and gratitude for this occasion. So Mr. Ismail Mukasa and Ms. Kashi Narwada, if you're with us, apologies. It's not out of disrespect, I repeat, but rather I wanted to present compliments, particularly to the gentlemen on the first panel before they leave. I'm told perhaps one of them has already left. Has Edward left? Ruth, has Edward left or is still around?
Unfortunately, he has left.
Okay, yeah, I really thought that I wanted to place this hopefully, but do we still have Louis Namwanja Kizito?
Yes.
Council?
Yes, we do.
Thank you. I can still see that we have Dennis Kizito online. And I may not be fully available for the others, but I will be listening, I think. So I wanted to stress the following points very quickly, not to delay Mr. Kizito, Mr. Mukasa any further. Number one, on behalf of the Radical New Back Governing Council, I want to present our compliments to all the facilitators for today's session because it answers squarely the purpose for why we convened the Radical New Live series, as I will demonstrate later on. It also responds to agenda R&B Vision 2060, agenda item number 4, as you know, digital transformation. And for me, when Secretariat informed me that this is the schedule for this week, I immediately, celebrated because I realized that we have now normalized, we have come to normalize what is digital, what is virtual, as just another event, in the life and blood of legal practice in Uganda. We have stripped digital, virtual conversations of the celebrity and fanfare and intricacy and technicality and pageantry that was previously associated with it, the novelty, but I liked the poster when I saw it. It showed the new faces, the new icons, the new representatives of the Uganda Bar. This is a very important, high watermark for our evolution as an industry. I say this because this year we celebrate 70 years of our existence as an organized market under the terms of the Uganda Law Society Act, although legal practice had existed since 1904 when the High Court was established in Entebbe under the Orders in Council of 1902. But in all this existence, there was a certain gatekeeping and ring fencing that attended legal practice, especially green fields like these ones. But I'm happy to see that the traditional gatekeepers are not present at this occasion. The bar, the heart and soul of the bar is truly represented in those who are the bar today and who will be the bar moving forward. That is something that required me to come and stress very clearly. Because as I noticed in the last 10 or so years, conversations about these subjects have been taking place, but they have been ring-fenced and they have been attended with these unnecessary, rituals that prevented access to knowledge, as in the terms I had you, Ruth, celebrate. They were paywalled, they were registration fees, They are called symposiums, they are called conferences, annual, they are given a certain pedestal. The pedestalization of knowledge was a very, very dangerous cancer we had in our legal practice. And so we said we shall bring this information and make it open source. Another word for you, Ruth, which I'm sure this is the language of Dennis Mwanja Kizito and his panel of the day. They are open source activists. And I wanted to come formally and register my celebration of what they believe in and what funds their passion and commitment to legal practice and shared society. So, colleagues who are Mr. Kizito, Mr. Emmanuel Amanyire, and Louis, of course, this probably is your third or fourth time here. You are prophets on a hill, holding keys to a shining castle and saying everybody belongs. You have no idea what this moment means for legal practice now and moving forward. You have no idea. Those were not the values with which lawyers thought legal knowledge should be held with. Legal knowledge, people who have knowledge that you have, hid it and kept it to themselves and get, put a lid on it, said you'll access it at an expensive fee. And they kept it mysterious and mystical. So you people are breaking ground. So that's the first thing, and I think I put it very clearly. To conclude this point, you are also developing a digital asset for the bar, this very archive. You are heroes in the sense that you're speaking to a physical audience that a traditional conference speaker would reject and walk away and say, there are no people here. Let me go. It's a flop. So for you not to judge the occasion by physical attributes, but rather by digital attributes, requires commendation and encouragement. To know that some of us miles away are listening every word, number one, in the now live, and many other people will stream on demand, at leisure, pause, rewind later on. But above all, our children and grandchildren will have access to this archive in various formats, long form, shorts, and all, media, TikTok versions, and so on and so forth. Texts and everything, they will do so much with this information that you have given the world. So your awareness to take this serious is something we must commend, because there are people who can't concentrate, who can't present and deliver, because they are seeing a very small physical audience, to speak, so, but anyway, the thing is, I'm speaking to the converted at the panel. You guys get it. I mean, from your presentation, you get it. You have given us a master class. I listened to Emmanuel, a fantastic envoy for the FIA. He's been generous, methodical, unrestrained, unreserved. Of course, that's Louis's style, but also from Dennis. who didn't allow, traffic jam and meetings and excuses and say, I'll be there digitally. So for you, it may seem simple, but I tell you, for those of us who have understood that it's an existential matter, it's a life or death matter, information will come by digital. We live in the digital. The digital is the now, the digital. We are digital beings. We are still few. The others who are in law firms and have wasted this time talking, and there are still many. The others, but you see, there are lawyers, non-lawyers having this open source knowledge now, and they'll have it later. So I thank you very much for that. I thank the Secretariat for taking this seriously, knowing that there are people who take it seriously, and you can't see them. You may not get feedback from them, but you still take it seriously. Some Ugandans don't have those high levels of integrity. Somebody once defined integrity as what you do, say, think, when no one is watching you, when you're not aware. So the level of integrity that you're exhibiting now is commendable. On this very point, just across the border in Kenya, there are ongoing interviews for the Judicial Service Commission. And one of the things we learn from those interviews is that so many people who are confident, capable, and credentialed refuse to apply or participate in the Judicial Service Commission process because they are not familiar with the digital, or they are extremely fearful of the digital interaction, accountability in the digital format. So when they put out an advert for judges, for those who want to be judges of the Supreme Court, because there's now a vacancy, only 6 people applied, 4 of them being judges of the Court of Appeal, 2 of them being women that nobody knows. The media couldn't even find their photos. And so you say, where are the others? Well, when you say the data is that, in Uganda, judges fear. They don't want accountability, transparency, because they fear the digital. There's a judge who wrote a judgment, Justice Irene Munyagonja, saying, no, we reject you people forcing us to do digital because we fear memes. We don't like to be memed, become, so on and so forth. So we shall keep our judicial recruitment processes behind the curtains. And that's her thinking in 2026. She thinks this process is stoppable. Yet when she lost her husband and she wanted to cry at the vigil, she knew she was speaking in the digital, and you also her tears go viral about Morago. Yeah. So there's a lot of hypocrisy within these old gatekeepers, but we are killing them and burying them. And I thank you for celebrating this experience with us. I want to make a point to our comms team, but this we can keep for in-house, keeping. We need more. We need to push more to energize when our visitors come. We need to push more because we can't rely now on legacy media, the journalists, the camera, taking. No. We have now archives, and we must become the journalists. And I thank you, Ruth, for saying that this has inspired you to write an article. We should be the ones now in the iCitizen, iJournalist. We should be the ones that are in control of our diffusion. We should be able to have future discussions. You cut away. The thing I want to add on, so that's one you've had, comms team, colleagues, lawyers here who are participating, continue. The third point I want to put on record is the element of public participation. Louis Namwanja Kizito in particular, I have heard you speak very clearly about the fragmented responses of regulators and so on and so forth, and very, very, very eloquently. But Louis has always complained to us that, Isaac, I like carrying water for the bar. I go to Parliament, I put in a lot of research, I submit memoranda, and nobody reads them. I come up with draft laws, and nobody wants to consume them. I write op-eds, I don't feel the engagement from the horizontal power. I have had a discussion with my brother Louis, and the invitation is still open. That Louis, allow me to teach you what we learned from social justice called horizontal power, horizontal organizing, where we don't wait for those who have formal structural official power. We disrupt them. You're a disruptor. But at the same time, you very much want to be received, with a red carpet by those who hold official formal power. But they fear you. You have a facility with this information which they fear. They don't know digital assets, but you access blockchain technology, but they have the job. So they think maybe you're a threat to their job, maybe you so there is a cultural dilemma that blocks your genius and prodigious talent from being well received in a backwater economy like ours, which is disgraceful, but it's something to think about. So Louis has made me aware as leader, head of the bar, that we need to focus on advocating for public participation law, so that public participation in decision-making at all levels of government is not merely voluntary, discretionary, but it's a matter of law. I think in Kenya, that was one of the hallmarks of their 2010 constitution, and it has been the hallmarks of their constitutional litigation, and it has been one of the hallmarks of their constitutional jurisprudence in the last 15 or 16 years now. The High Court has said public participation is compulsory, important, strict, and they have nullified many acts, including in 2023 and 2024, the Finance Acts, for lack of public participation and so on and so forth. And they would, if the courts hadn't done that, there would not be the mandamano. People wouldn't feel that we are one Kenya. So in Uganda, we are still backwards on public participation. In fact, we have the very bad decision of Malema Vidiza versus the Attorney General, both at the constitutional petition of 2017 and the constitutional appeal of 2018 that you know as the age limit dispute, the age limit case. Please take my brother Louis and colleagues, especially those coming from the regulator, Dennis Kizito and Emmanuel Amanyire. Of course, the departments you represent are some of the best. They're some of the best regulators that take public participation seriously. And please take this to your executives. We thank them. Capital Markets Authority, yeah, of course, Louis has higher standards for you. But for those of us who see others, you do well. You do well. And so does FIA. Maybe because you are regulated globally also. You are not the end of things, But the regulators who have no global community or ecosystem, they don't take public participation seriously. And that's very discouraging for public intellectuals like Louis and many, but also it's also very harmful to many Ugandans, especially those who don't have access to privileged education and legal skills and knowledge and experience like what we're discussing today. These things are not very difficult. They can be made soluble to the lowest common man, even in our local languages, if the entire industry market has the discipline and aspiration to make this information publicly available before we make it, before we define a common aspiration. So we should go on record that as the bar moving forward, as the radical new bar, we need to make it a priority that we must advocate for a public participation law like the one that has been presented in the Kenya Parliament, I think this month or last month, I guess, but the first reading will be this month, I believe. Louis, take interest in that. Yeah, all hope is not lost. But for Uganda, the public participation were doing very badly because the judges conducted themselves with great indiscipline in the age limit decision. They played politics with a very important issue central to people's power, public participation. So we are really in darkness. And as they say, democracy dies in darkness. And without public participation, there's no transparency, there is no democratic dividend. So, but we are doing our part through Rnblive. Of course, we are trying to foster and engender public participation. There are those colleagues who think that this process is another pageantry, maybe, because that's what they used to. They think it's, far beyond, it's unnecessary. But the beauty is that it's not, the information is down here. Those who come later will see just how advanced, how avant-garde we were in making knowledge publicly available. I want to again move on, and in this particular regard, I want to thank Ismail for putting up your hand, because Ismail is one of the members of the public who said, well, you people have an R&B, you put an application. So citizens are out there, businesses, which take customer responsiveness seriously, out there. And I think Mr. Ismail Mukasai was informed, he belongs to that ground. Because why would we give you pride of place? There are over 30, players in the market. Why are you the only one here? You're the only one who put up your hand and said, I want to come to the R&B. Can I come to R&B? And I think you're shocked that there is no gate fee. you must be shocked. But if you have some money, some gift for the bar, for the continuance of this activity, welcome. Because others will put a gate fee to this. But thanks for coming to talk to lawyers about professional indemnity at the Radical New Bar Council, at the council level. This is just a starter. But at the council level, we should have a bigger discussion because we want to have bespoke solutions. Professional indemnity has been a non-starter in Uganda for many reasons, one of which I want to discuss now before you come in, because it's connected to Amanyire, who has just left us. The Uganda Law Society, Mr. Mukasa, is a sham. It's not a law society or a bar association in the strict sense. It does not have regulatory authority, supervisory authority, disciplinary authority. It doesn't even admit lawyers, and it doesn't exit lawyers. And therefore, it cannot fully be a reliable broker for you, marketer for your service, because it's just a club. In fact, you can even call it a prison. This thing is the captured entity. It is still in the frame it was presented as a government bar in 1955, when Governor Cohen needed to control the young Turks, as they called them, Abu Mayanja, Beni Chiwanuka, the young Turks from Uganda who were disturbing him. What do I do for them? Let me write a bar act so that they are now subject to the hegemony and dictatorship of white lawyers and Indian lawyers. That's it, and we have never come out of that. So it was written not as a bar association, as you know, any bar association in the global north and even in the global south. All our colleagues have made reforms to say, look, the black bar, the Asian bar is different from the white bar. We should create parity. And they wrote laws, But in Uganda, our attorney generals, our government lawyers have never been honest, sincere, and patriotic and dedicated to the common man. They continue to serve a government that has the same objectives as a colonial government, irrespective of the reforms and, that we have had, critical junctures, independence and what, and so on. No, the government lawyer still thinks that the purpose of a government lawyer is to obstruct, deny the citizen rights, and ensure that the government is the monopoly of obstruction. So that's it. So we can't help you much. I sit in the FIS structures. I thought Amanyire has left. And I can't help them. They're doing so much. Uganda is real estate. One of the reasons is the legal profession is not properly, is not clearly, transparently regulated. When they check, they say law council and the global committees, the FATF, what is law council? They say, no, it must be law society. And then, there's a lot of confusion. And even many Ugandan lawyers don't know this because they don't know the UN basic principles for the role of lawyers and the IBA standards for independent legal profession, which we started in 1990. They don't know that an independent bar is in charge of one, legal education. And so it will be the law society that is accrediting universities. But in Uganda, it's a law council, a national council, higher education. No, it should be the law society at legal education. The law society must then want to, assess the outcomes of legal education, which is the one in charge of entry. So if there has to be a pre-entry exam, what is a bar exam? So the bar exam, not the bar council, no council government exam. So the bar exam to enter the bar. So the bar must be in charge of admission exclusively without interference. Then the bar must be in charge of everything while you are at the bar. So we are still captured, Mr. Mukasa. And the government does not then want to do for you the job you want to ask us of us. They can't chase lawyers. And the government, the Law Council cannot start saying, the Law Council Act, the Advocates Act doesn't give Law Council the power to impose the professional indemnity. Because then it will be, we shall challenge it. We shall say, who gave you the authority to impose these things, on us. These are things we're supposed to, this is the contract. It's a contract. Why do you make certain contracts? Where? How? How do you make this contract compulsory to us? So your contract is voluntary under Uganda law because we have no means of resolving ourselves and say, convincing ourselves and say, now let us accept this as a condition of practice voluntarily. And then we pass it as our law through our lawmaking authority, like all other bars. So we are here in this nonsense, and it has cost us a lot of money in terms of attracting new clients, retaining clients, recovering from client disputes. You go to law council, they have all these problems that would be solved if there was professional indemnity. There's a backlog of problems there, which would be solved by professional indemnity because we are complaining about money.
Mr. President, we have lost you. Hello, Mr. President, can you hear us? Hello? Mr. President, are you there? Okay, considering that the President is having some network challenges, I'd kindly request that we move on to our speaker, Mr. Ismail, who had already taken on the floor, and then we shall just come back to Mr. President. Mr. Ismail, over to you. Thank you.
Thank you so much. Good afternoon, ladies and gentlemen, those who are here physical and those online. I invited quite a number of friends, especially in the Rotary fraternity and also the insurance fraternity, to join me as I share some few insights this afternoon. It's quite unfortunate that we've lost out on the President. I particularly would have loved to listen in to all his remarks. But in a special way, I think I've missed out on having a photo moment with him. Some of those are pictures that we really love to have. But before I also share a few insights about professional indemnity, allow me, first of all, appreciate the legal fraternity through the radical new bar that gave us this platform to have a conversation with you initially earlier in the day, but at least this afternoon, because you continue to foster equity in our societies. Allow me to also appreciate AFRA for the invitation and the courtesies extended to me up to when I made it here. I cannot be here and I don't appreciate our regulator, the Insurance Regulatory Authority, led by Alhaji Kadunabi. I think the insurance industry, you'll all attest to it, has moved strides because the regulatory framework is so robust, not in a punitive way, but to make sure the industry grows. So Alhaji, we salute you. To our umbrella body, the Insurance Brokers Association of Uganda, some of whom I know are also online following, I want to also thank you so much. AFRA, there is a hotel that told me if I speak about them on a platform that brings together lawyers, that probably one of you can go there and have a meal one of these days. I'll give your name to them. That is Nikan Resort Hotel in Reza. I hope you know where it is. It's an Entebbe Road, a place called Seguku. But Louis, I know Louis must be knowing that place. He's an Entebbe Road probably person. This afternoon, in my conversation, I would want that at the end of the day, to leave with you three things, or to achieve three things. Number one, a better appreciation of professional indemnity insurance, which in other markets is called errors and omissions. Number two is that beyond the definitions, I would want us to have deeper perspectives on why we actually need this kind of insurance arrangement. And number three, contrary to what my brother Louis said, is that to encourage law firms, if you cannot go through an insurance company directly, look for the nearest insurance broker through our platform and umbrella, the Insurance Brokers Association of Uganda, and seek this guidance on how to place the best covers. And certainly, Artemis Insurance Brokers will be there for you as well. So this afternoon, I put together a few slides and I've already shared them with AFRA. And I hope the team online can follow as well. I will, pardon me. Sorry, the digital world is challenging me a bit, but I should be set. I needed something that is also closer to me. So, in this conversation, I put it that beyond malpractice, what other strategic value can we get from having professional indemnity insurance? If you look at that slide, for those that are following, your kind of practice and services that you offer, just like insurance, and I'm glad I'm part of this forum, we have shared values because our business is about contractual obligations. Contractual obligations have a lot to speak into reputation. And so, three things that I would leave from here is that as we look at professional indemnity, there are three strategic values that we'll look at: risk transfer, financial stability, and then market advantage, especially if you're protected that way. But in there, in the strategic resilience, it speaks to us appreciating what it means to have another person look after you or look at your back, especially as you proceed in doing your business. And your advisory services, the legal advisory services. I'll share a few insights on both the global perspectives in terms of numbers and also what it means in the Ugandan perspectives. And so, if you're to define, and at the risk of not getting too academic, what professional indemnity means, this is an insurance cover or policy that protects you professionals and your businesses from financial losses that rise in form of claims due to negligence, errors and omissions in the services that you provide. So the key point is that people who take on professional indemnity are professionals. And I'm glad I'm speaking to professionals. In fact, I'll write it somewhere, Afra, that on some day I spoke to the Uganda Law Society, the radical new bar. I'll add it in my CV. The next time I'm invited somewhere, it should be indicated. So what is covered in there? And I'm trying to make the slides as short and sweet. You already have them. They will be shared on your different platforms. So we cover financial losses that come out of negligence. And as a legal persons, you know what it means to prove negligence in your language. It is quite tedious, but when it eventually shown that you were negligent in your professional duty, in executing your professional duty, that is what we look at. Now, it typically looks at legal defense costs or settlements and damages awarded. What does it mean? That if you as a firm or a lawyer or an advocate, you offer legal services to a client, and the client through your services is at a certain point seen to have missed out on something or lost something due to negligence or an error or omission, and this will be coming in the next slide or so. This person then goes to the same, streets and offices that you go to, the courts. You go through the whole process. When eventually it's proven that actually in exercising your professional duty, you were negligent in a way or two, that then means damages are awarded to the client that you served. So it's at that point that this law firm that bought or procured a professional indemnity policy comes to the insurance company to settle. Now, settling that is within particular limits, what we call limits of liability. Now, limits of liability in insurance we probably can look at two ways of indemnifying people. Some of them should be just based on market forces or market values, so it's indemnity. The other one is based on limits of liability. Because there is a third party involved in this, you as the law firm choose the limit of liability against which you would want insurance to give you coverage. And so there are three practical considerations as you're looking at limits of liability when you're taking on professional indemnity. Number one is that you look at the potential exposure. This could be based on a project size. You could be working on a certain project, and it is a requirement to have a limit that just in case, while executing my duty as a lawyer, as an advocate, there is an error or omission. The kind of client, I'll use an example, tongue-in-cheek, Total, ENP. If he takes me to court, the minimum they can, give as damages is probably $1 billion. So that depends on your law, the size of law firm and the kind of clients that you handle. If I used an example outside this context of, say, a medical facility that also is required to have professional indemnity, if most of your patients are people like myself from Masaka, probably I might not have very many legal minds around me if in executing your professional work, something might come to me. And so the best I can ask for if I go to court is probably 50 million. And because on another day I might put on a jacket of a Rotarian and I know people here and there, probably it can go to 200 million. But if it's a hospital that is handling MPs or foreign dignitaries, expatriates, it might be required to have a limit of liability of in excess of $1 billion. So that speaks into what you need as a limit of liability. The other consideration for you as a firm could be a contractual obligation. You could be bidding or being party to a certain contract, and they are specific. The bit of it is the same colleagues of yours who define these limits as lawyers. And so if they put those limits in there, they come to you fair and square. And then the other bit is your premiums are normally defined. They have an attachment to your claims history. If, for example, your law firm has been known at the avoidance of being quoted for clients losing in many cases for whatever reason, that could be indicated in probably my next slide. When we're taking on some of these covers, when you give us information to ascertain if we can actually insure you, one of the things we ask for is your claim history, because it helps us understand. In our language, it's called underwriting. It helps us evaluate if it's a rate, if we will take on the policy, if we deny or decline, or if we load, give you extra requirements, including things like CVs of the persons that you're covered or taking on. And so what is not covered are criminal acts, intentional wrongdoing. So like you said, it should purely be an error or omission of sorts. Having spent that 1 or 2 minutes on that slide, and explanations and what it means, I invite all of you here, physical and online, you can just search around that. But probably these next 2-3 slides put the conversation in context better than ever. The reality about your legal practice. When would you think professional indemnity, just in case you're in doubt, could come in to hurt you? There are times when you have missed deadlines. I'll use an example, Afra, at the avoidance of not being invited again. We could have started at 10. We started probably some few minutes, and Lou, we started with that close to midday. What does that mean if it was now a case that you're handling? That is when you would miss a deadline, and I'll quote a case in my next slide there about. And so, to your own peers, and I'll borrow the words of my brother, and I'm glad I got his number, I'll continue learning more English from him. To your own peers, they will take it that if you miss that deadline, that means it was some bit of negligence, or there's something unprofessional about how you did it, and so it might come up. The other element would be in conflict of interest. Do we have adequate checks when, especially we're supporting our clients in doing business with them, you're advising them? At what point do you draw the line? Not a thin blue line, not a dotted line, but a clear line that whereas I'm representing my client X, and I might have interest in the property or in their engagement, how do I declare? And at what point does this client of yours get to realize that you actually had interest in this, engagement, and somehow you made them lose some money? There is cyber and privacy, and I'm glad the team talked about this much earlier. I think we all need to continue knowing what data protection policies speak to, both at within our jurisdiction as Uganda, regionally, but also at a global scale. And that speaks into the kind of clients that you're working with and you're supporting. It will be that one moment when a certain file or information about your client goes anywhere. And if it's picked because there was no privacy, it might become a problem. And then the employment risks that come along with it. Do we look at things like ESG. It used to be a new phenomena, but not anymore. But specifically the social element, the employees and employers, when you're working on their documentation, do we try to make sure we don't leave any gaps in that? And so there's a small quote there, that hope is not a risk strategy. The ask, the reminder to the lawyers, the advocates on this call and here present, is to make sure, as we're doing our business, we look at these 5 and probably any other that might expose us to what will eventually be looked at as an error or omission. Now, looking at the global market growth, and the President talked about this, or alluded to this. The market is growing steadily, especially on professional indemnity. It is assumed that by 2034, probably will be underwriting globally premiums close to 90.5 billion for only professional indemnity. The question is, are you doing it yourself? What are the key market drivers to that? Number one is what you call capacity returning, and that speaks to both domestic and regional maturation. Our own market as Uganda, we will get there. Louis, we will get there. To Senior Counsel, President Semakade, we will get there. As we continue having these engagements, we are confident that law firms, lawyers, and probably contractors, and all parties that normally do business with you realize the need for having these policies. And so, as our markets mature, the numbers continue going up. The uptake for these policies continue going up. The other bit is litigation culture and risk assessment. As we continue having the middle class growing and appreciating their rights more, they now continue to understand where they need to run to if their rights are infringed in any way possible. And one of the ways is going to court, especially if they think the professionals that they engaged might not have done the best job. And so it is a key driver. And the last one is regulation and compliance. President spoke about some of the pitfalls that the Law Society is facing. Probably one day it will come to a point, the same way we have in the motor, in the Traffic Act, you can't have a motor car or a motor on the road without third party. Probably one day it will also be a key requirement with a clear body monitoring if any law firm has professional indemnity. So those are key drivers to that. I'll not spend much on this slide. It talks about the Ugandan market landscape. I invite you to visit our Insurance Regulatory Authority website. We publish through our CEO and the team reports, quarterly and then annual. And then so you can find some of these numbers there. They should be able to support us in most of these conversations. Now, you cannot speak to lawyers and don't quote a case about things that I'm talking about. And I know there could be some younger ones who are still going through the hassles of these cases. So the most prominent and used and referred to legal or case about professional indemnity, speaking to lawyers or law firms in line with diligence or due diligence and competence in the practice, is what you call the Lucas and Ham, and it's quoted in 1961 in California. So the summary of it is that, the fact summary of it is that there were some intended beneficiaries of a will that were drafted by a lawyer that alleged that it's his negligence or the law firm's negligence in drafting the will deprived them of some substantial benefits in that. And so in it, the synopsis of the law shows that lawyers drafting documents, you are seated here and those online, on behalf of your clients, all duty of care to the intended beneficiaries as well as the tester. So the thing is, as they were drawing this will, there are some beneficiaries that were not catered for, whether in terms of wording or it was a genuine omission and stuff like that. And so the conversation is around that. But I can also quote for you two more. So this one is purely on due diligence, but you can also refer to a case where it's Flat versus Superior Court in 1994, and it's in California. It's about negligence. I think it's one of the most interesting bits in your profession, proving negligence. And the other one is on missed deadlines. It's a Truman versus Thomas in 1980 in Wisconsin, still in the United States. So I've tried to pick out three that would speak to you. Due diligence, cases that you can look at and probably have that other conversation with either your partners, your other lawyers, on the why you should have this policy. And then one on negligence and another one on missed deadlines. Very fast, to remind ourselves on the other bits that I spoke about: risk management, clients' confidence, and financial stability. When you're looking at risk management, I invite you to see how better you have operational controls as law firms, because then they'll help you appreciate your risk appetite, appreciate how you're either choosing to retain the risk or actually go for insurance. So these are conversations that you can have, I know, in the interest of time. So you can look at how do you, calendar your systems. How do you look at the systems that help you remind yourselves and other colleagues within the fraternity on what to do next? Do you check on the conflict of interest like mentioned earlier? Are you open to that conversation in letting the clients know? Are you able to probably let another legal brain handle a particular client just because you feel you have a conflict of interest in that conversation? How good are we at our governance structures, and also looking at the new phenomena of AI and governance in itself? Are we all in our law firms comfortable that we sit and draw these documents, or there are times when we use Mr. AI to draw them? Oftentimes it could quote a different person, a different name and stuff like that, and becomes a problem at the end of it all. The other one on reputation protection, still I looked at which crisis you would be looking at, and therefore we should be responding to. So the whole point here is that you should be protecting the badge of your firm or your firm, so that you support in terms of making sure your reputation is protected. I think there is one that you can quote very recently in the papers within your fraternity, very near us, and I want to mention about things, what it means for reputation. I think there's an issue of rent, and then it should have been bought and stuff like that. So you should have a very robust way of responding to claims in case they come through, and that means you should have a robust professional indemnity cover for us to come to your rescue at that point. And then how do you have your own persons appraised or upskilled on things like these policies that we're talking about? One of the best examples, Louis, I've faced in my 16 years or so insurance life is that at a certain point some years back, I had a very good conversation with a client and his lawyer. And this is not to throw banter at anyone, where the client sought to have comprehensive insurance for his brand new car, but it had also come with a third-party sticker from the bond. Now, and I'll quote, I wish I would mention that name. When we gave the client a motor comprehensive policy document, which comes along with a certificate, which many call a sticker. It's a certificate that is held on with a stick on the windscreen. So I told the client to now remove the third-party certificate. And he really trusts his lawyer. He said, let me ask him. And the lawyer said, no, please leave it there. So, and being an insurer, I could not go into the legal semantics. I let the client have both the third-party certificate and the motor comprehensive certificate on his windscreen, reminding me of some of our uncles who would move with graduated tax, like 7 of them in the wallet here, just because if police found them, he had to prove that he had paid tax for the last 7 years. So I love the fact that you're engaging us. You're very good and professionals and, in your fraternity. But I also want to believe there are gaps that you could have got while studying insurance law. So every time we have these conversations, it's a very good thing for us to move together. And then still, I'll not really go through much into the financial stability. All I'm saying is that please look at your risk well. And I'm glad someone brought out the words, being risk averse. When you choose to hold it and say, for me, no, for me, I can hold that risk. Until you sit with a friend over a cup of coffee and is hit with the damages or settlement of, say, 500, 300 million because of an error or omission while performing your professional duty, which is going to hit their bottom line on the accounts, you might need to rethink on why you can buy or secure professional indemnity as well. So the call here is that it's not about the price, because I know it's one of those policies that attract a big rate because of the risk that we're talking about, but look at the eventual value that you get in securing this. I cannot live without at least giving you a slide on Artemis Insurance Brokers. So it's an opportunity. I know President said about that. So when that conversation about an invoice comes one day, probably we'll look at it. We are domiciled in Kololo. Not very many brokerage firms are in Kololo. Wampeo close. You can always come in and have a conversation. So we are just on the same route. And we can do those specialized services for the law firms. We can help come up with a program design and strategy for your insurance policies, not only professional indemnity, but quite a number of classes that you would need. Would love to work with you that journey of tailoring the wording that you'd want to see in your policy, because then we have a good conversation with the underwriters or the insurers in coming up with that. Still, we do for you the policy advocacy. We let you sit in your offices and we run around. We've worked with the insurers. We know, and we can, yes, you draft the policy wording and probably even the claims documents and all that. But I think the practical bit, we know how to handle our insurers on that. And then certainly the risk workshops, like we're doing right now. I would love to have a session with any of the law firms that are willing to have a conversation. I know we've had, and I can mention my senior brother Isaac, he must be on call, invited us and spoke to his law firm in Bogolobi, and it was a good thing. So we can always come and just have a conversation with your teams about all kinds of policies. You never know what it would mean to the members whenever they're engaging the clients. That is our regional and global presence. So in Uganda, we're in Kololo. We have, and we come with 50 years of experience in the insurance and brokerage world. We have an office in Qatar, in Doha, in Lebanon, in Georgia, Iraq, and Kuwait. It is our wish that Uganda becomes the East African hub as we get there. What is it that I would ask of you, those who are here physical and those online? Give me an opportunity to engage you. You can reach out, my contacts are there, and this presentation is going to be shared with you, or just walk into our office and we have a conversation about insurance and how best we can support each other. As I conclude, I still want to thank you so much for the opportunity. I want to thank all those that are online, that are listening in. Like President said, it's a digital new era. In fact, I hadn't felt the weight of the engagement until when he brought it that way, that look here. And his words were really touching. You don't know what you've meant for us to have this engagement, those who are online and those who are here physical. So I really want to appreciate, but also want to, in a special way, appreciate the fellow Rotarians. Many of them are on YouTube, because in the other world, I seem to be also quite elevated in leadership in Rotary. Thank you so much.
Thank you so much. Let's give him another round of applause. Thank you so much, Mr. Ismail Mukasa, the Operations Manager from Artemis Insurance Brokers Limited. Thank you so much. Yes, I'd also like to recognize the presence of Mr. Galandi Tony. We call him Chair. Thank you so much. He's a very good friend of the Radical New Bar, and we really appreciate your efforts. Yes. So I'd like to take this opportunity to thank you all, our online audience that has been here since morning up to now. We really thank you so much for tuning in to this edition of the Radical New Bar Live, the 5th edition in 2026. And I'd like to also thank you, the physical audience that is here. And in a special way, I'd also like to thank all our speakers. So at this juncture, I'd like to welcome our council member, Honorary Secretary, Acting Honorary Secretary, Mr. Sali Babu, to come and just close, and then we can call it a day. Thank you so much.
Thank you, moderator. Good afternoon once again. I wish to take this opportunity and privilege to thank our speakers. Thank you for sparing your time to come and address the membership of the Uganda Law Society and the members of the public. The topics you've handled today are a little complex for many to comprehend, and I can authoritatively say I do not think many have comprehended that much. And just as you requested, and also the program's personnel vow to include that on the CLE program, I believe with adequate preparation and sufficient time, our membership will ably be guided, get to understand these principles, and probably for those who will still not understand at that stage, you will have to give them a private lecture, if you will, please. With that, I wish to thank all the speakers. That is Mr. Ismail. Thank you for the great insights. Councillor Louis, thank you for sparing time off your busy schedule, as well as Edward, who is not here, and Mr. Dennis, who is online. And I also wish in a special way to thank the members of the Uganda Law Society, the public and the Secretariat who have come here physically, and the members online. With those few remarks, I wish to close the R&B session for today. Thank you.